Let us start with a revisionary test paper of November 2020 CA Intermediate Financial Management. We are starting with the revisionary test paper of November 2020 CA Intermediate and for Financial Management. The question number 1 is from a ratio analysis. The question is like this. Following information has been provided from the books of Messrs. Lakshmi and Company for the year ending 31st of March 2020. Working capital is 4,80,000, that is current assets minus current liabilities. Bank overdraft is 80,000. Fixed asset to proprietary ratio means fixed asset to proprietary fund ratio is 0.75. Reserves and surplus 3,20,000. Current ratio is 2.5. Liquidity ratio or quick ratio or asset test ratio is 1.5. You are required to prepare a small balance sheet as on 31st of March 2020. So from this information we are required to prepare the balance sheet. Let us see how we can calculate the answer. My first suggestion to all students is like this, that whenever you see the working capital, current ratio and liquidity ratio, then using this three information make quick calculation of the current assets, current liabilities and stock. These things you can compute very promptly, say taking into account this three information. So let us start with the answer. So answer of question number 1. In that we start with the current ratio information. Current ratio is current assets upon current liabilities. So as far as the current assets is concerned, it is current ratio into current liabilities. What is current ratio? Current ratio is 2.50. So it is 2.50 into current liabilities. That is what we understand is the current assets. Now as far as the working capital is concerned, working capital is current assets minus current liabilities. Working capital is given to us in the question as 4,80,000. So this is 4,80,000. Is equal to current assets, that is 2.5 into current liability minus current liability. So 4,80,000 is equal to 1.50 current liability. So current liability is equal to 4,80,000 divided by 1.5. That comes to 3,20,000. Once we have the value of the current liability, we can compute the current assets. So here the first working note is calculation of current liability. Now we will make the calculation of current assets. Current assets is equal to, as per the working that we have done, 2.5 of the current liability. So it is 2.5 into current liability. So 2.5 into 3,20,000. So it comes to 8 lakhs. You can even cross verify the answer, 8 lakh minus 3,20,000. So the working capital is 4,80,000. So now the next information is provided to us is the liquidity ratio, that is quick ratio 1.5. Now that information will be useful for making calculation of the stock. So next is calculation of stock. So liquidity ratio is equal to current assets minus stock divided by current liabilities. Liquidity ratio is 1.50. Stock value is 8 lakhs. Current assets value is 8 lakhs minus stock, which we are required to find, divided by current liabilities, which is 3,20,000. So now what will happen? It is 1.50 into 3,20,000 is equal to 8 lakhs minus stock. Now stock is transferred on other side. So stock is equal to 8 lakhs minus 1.5 into 3,20,000, that comes to 4,80,000. So in that case the final answer comes to 3,20,000. So stock value is 3,20,000. Okay. So the information which have been provided to us have been utilized by us for the purpose of calculation of the current assets and current liabilities. Now friends, we have been provided with the information about the fixed asset to proprietary ratio. This is an important information. Based on that, say we are required to compute the answer, that is subsequent answer. Importantly friends, in computation of the liquidity ratio, current liability is taken in division. Current liabilities को लिया जाता है division में, and not like the current liabilities minus bank overdraft. That is an absolute clarity about this point now. So now what happens at, say, using this information, how we are required to do further answer, I explain that to you. For that, say we understand like this: fixed asset to proprietary fund ratio. In that, fixed asset upon proprietary fund, and the answer of this is 0.75. Okay. So as far as the fixed asset is concerned, it is proprietary fund into 0.75. Now if at all we visualize the balance sheet, then in that case the total liability is equal to total assets. Fine. On the liability side we have the proprietary fund, and the proprietary fund includes the equity share capital, reserves and surplus, preference share capital, security premium, and so on. In this question, directly or indirectly, no information is given about preference share capital, so we assume it to be 0. Security premium also, for that no information is given, so we assume it to be 0. So we understand that the proprietary fund must be consisting of the 2 points. One is equity share capital और दूसरा क्या होगा, reserves and surplus, जो हमको क्वेश्चन में दे रखा है. On the asset side, we'll have the fixed asset. Regarding investment, no information is given, so we are ignoring it. Then we understand that we can take over here the current assets minus current liabilities. That is the way we can take the working capital over here, or otherwise if at all you want to take over here the current assets, then in that case you will show the current liabilities over here. Ultimately it is going to have the same effect. We have computed that the fixed asset is 75% of the proprietary fund. So over here 75% of proprietary fund plus the amount of current assets is 8 lakhs. Proprietary fund is what we do not know, and the amount of current liability is 3,20,000. So now in this equation we will have the proprietary fund as balancing figure. We understand that the proprietary fund minus 0.75 of proprietary fund is equal to 8 lakhs minus 3,20,000. So it is 0.25 of the proprietary fund is equal to 4,80,000. So proprietary fund is equal to 4,80,000 divided by 0.25. So in that case it comes to 19,20,000. We have already been provided with the information about the reserves and surplus 3,20,000. So reserves and surplus will be deducted from proprietary fund to compute the equity share capital. So next is equity share capital. So the amount of reserves and surplus is 3,20,000. So rest is the equity share capital. So next is calculation of equity share capital. In that we understand that the equity share capital plus reserves and surplus is equal to proprietary fund. Equity share capital plus reserves and surplus value is how much? 3,20,000. And total of this two is the proprietary fund 19,20,000. So 19,20,000 minus 3,20,000, that comes to an amount of 16 lakhs. This is the way equity share capital can be calculated. Next, calculation of fixed asset. We can see that the amount of fixed asset is 75% of the proprietary fund. Proprietary fund कितना है? Proprietary fund had 19,20,000. So the fixed asset can be computed as 0.75 of proprietary fund. So 0.75 of 19,20,000. So it comes to 14,40,000. Next, there will be the final balance sheet presentation. So we'll have the balance sheet like this. Balance sheet of Messrs. Lakshmi and Company for the year ended, that is as on, of Messrs. Lakshmi and Company as on 31st of March 2020. We will have the liability side, amount, asset side, and again amount. So now the balance sheet will be like this. First of all, we start with the equity share capital. The amount of equity share capital is 16 lakhs. The next is the reserves and surplus. It is an amount of 3,20,000 friends. Then the question itself is providing the information about the bank overdraft. Bank overdraft is given an amount of 80,000. Next is other current liabilities, or you may term it as the creditors. Either of the way you can mention it. The amount of, that is total current liabilities have been provided to us as 3,20,000. Out of 3,20,000, overdraft will be deducted 80,000. 320 minus 80, so it comes to 2,40,000. Next, on the asset side, we'll have the fixed asset 14,40,000. Stock, which we have calculated. Stock is an amount of 3,20,000 again. Then other current assets, which will include, of course, the debtors, cash bank, and so on. The amount of total current assets is an amount of 8 lakhs. Okay, the current assets is 8 lakhs. Out of 8 lakhs, we have got the stock value. So remaining is other current assets, 3,20,000. That is 4,80,000. Regarding investments, directly or indirectly, no information is given, so we are ignoring it. Regarding long-term loan, again no information is given, so we are ignoring it. And this is the way we will prepare the balance sheet. Let us see the liability side total. It is 16 lakhs plus 3,20,000 plus 80,000 plus 2,40,000. Now let us do totaling of the balance sheet. 16 lakhs plus 3,20,000 plus 80,000 plus 2,40,000. That comes to 22,40,000. $14,40,000 plus 3,20,000 plus 4,80,000. That is again 22,40,000. This is the way we are required to prepare the balance sheet. Second question. Calculate the weighted average cost of capital using the following data, using the book value weights, market value weights. The capital structure of a company is as under. Debenture is an amount of 5 lakhs. Preference share capital is again 5 lakhs. Equity share capital is 10 lakhs, and that is where the total comes to 20 lakhs. The market prices of these securities are: for debenture 105, for preference share 110, and for equity share it is 24 rupees per share. Additional information: rupees 100 per debenture redeemable at par. So 100 rupees is the face value and the redemption is at face value. 10% is the coupon rate. Coupon rate means the rate of interest. 4% is the flotation cost. 10 years to the maturity. Rupees 100 per preference share, again redeemable at par value. 5% is the coupon rate and 2% is the flotation cost, and 10 years to maturity. Equity share has rupees 4 flotation cost and market price is rupees 24. The next expected dividend is rupee 1 with an annual growth rate of 5%. The firm has a practice of paying all earning in form of dividend. Income tax rate is 30%. Use yield to maturity method to compute cost of debenture and cost of preference share. That is a question. So over here The question is providing that say you are required to compute the weighted average cost of capital using the book value approach and using the market value approach. That is the question. Dear students, when we are required to compute the weighted average cost of capital, then in that case, the first thing that we are required to do is computation of the cost of capital for the individual source of finance. The second thing that we are required to do is computation of the proportion in which we have raised the financing, and then product of this two is the weighted average or overall cost of capital. That is the sequence in which we are required to calculate the answer. सबसे पहला क्या करना है, कॉस्ट ऑफ कैपिटल फाइंड करना है. दूसरा क्या करना है, कितने प्रपोर्शन में हमने फंड्स इकट्ठा किया है वो हमको कंप्यूट करना है. और फिर क्या करेंगे, फिर वेटेड एवरेज का कैलकुलेशन करेंगे. खत्म हो गया. दैट इज द वे वी आर रिक्वायर्ड टू कैलकुलेट द आंसर. सो सबसे पहले लेट अस स्टार्ट विद द दैट इज कैलकुलेशन ऑफ द कॉस्ट ऑफ इक्विटी. सो द आंसर फॉर द सेकेंड पार्ट ऑफ द क्वेश्चन, जिसमें कैलकुलेशन ऑफ KE कॉस्ट ऑफ इक्विटी कैसे किया जाएगा, D1 डिवाइडेड बाय P0 माइनस फ्लोटेशन कॉस्ट प्लस ग्रोथ रेट. D1 का वैल्यू कितना है, D1 का वैल्यू है इट इज ₹1 पर शेयर. नेक्स्ट ईयर का डिविडेंड दे रखा है ₹1. P0 कितना है 24. फ्लोटेशन कॉस्ट कितना है ₹4. प्राइस इज गिवन 24 फ्रेंड्स. फ्लोटेशन कॉस्ट इज ₹5 प्लस ग्रोथ रेट 0.05. डियर स्टूडेंट्स, नंबर ऑफ टाइम्स आई कम अक्रॉस टू अ क्वेश्चन दैट सर ये जो डिविडेंड दे रखा है उस पर ग्रोथ रेट ऐड करने का या नहीं करने का. See over here, language of the question is very clear. That's the next year expected dividend is ₹1. So directly the next year dividend information is only given, and you can see the formula is D1 upon P0. D1 stands for the dividend per share at the end of first year. So what will happen? It is 1 upon 20. So it is 1 upon 20 plus growth rate, which is 0.05. Accordingly, we'll calculate the KE. So 1 upon 20 is 0.05 plus 0.05 0.10, or we can say that it is 10%. Or otherwise, what a student can do, a student can have an application of the formula like this: D1 divided by P0 minus flotation cost into 100 प्लस ग्रोथ रेट. ऐसा हम लोग फॉर्मूला यूज कर सकते हैं. D1 का वैल्यू कितना, D1 का वैल्यू ₹1. P0 कितना है 24. फ्लोटेशन कॉस्ट कितना है ₹4 इंटू 100 प्लस ग्रोथ रेट कितना है 5% है. So what happens friends, 1 upon 20 into 100, it comes to again 5%. So 5% plus 5%. So percentage दोनों ऐड किया जाएगा, and that is the way the answer comes to 10%. ऐसा करके 10% का आंसर कैलकुलेट करना है. Dear students, in my opinion, calculation of the cost of equity is not at all difficult. However, the calculation of the cost of debenture is really a very good point that they have specified over here. How they have specified, I just explained that to you. The first thing that we understand is that the information is provided that the debenture is redeemable security. So over here, next is calculation of KD, cost of debt financing. I tell students like this usually that when you compute the cost of debt financing, the first thing that you need to check is that whether the security is issued for perpetuity, in a way that the security is issued for, that is forever, it is irredeemable in nature, or the security is issued for a certain time period, this is the first thing that you need to check. In this example, it has been given it is issued for a certain time period. Now, if at all it has been issued for certain time period, then in that case there are two methods by which you can do answer. One is given a name as approximate formula method. And another is yield to maturity method, or it is given a name as IRR method. In case of approximate formula method, we do working like this. It is amount of interest into 1 minus t plus redemption value minus amount received by the company divided by number of years, whole divided by redemption value plus amount received into 1 by 2 into 100 for getting answer in percentage term. This is the simple formula that we have which we apply, or otherwise we can go with the IRR method. In most of the questions, they never specify which method is to be adopted for the purpose of calculation of the cost of debt financing. That method is not specified by them. So you can do answer by either of the method, and usually you adopt the approximate formula method, because doing answer by that method is simple. Of course, the answer is not as accurate as the IRR method, that is yield to maturity method. However, in this question, importantly the question is specifying that so you are required to follow the IRR method. So whenever there is a clarification in the question that you are required to follow a specific method for the purpose of calculation of the answer, then in that case you don't have a choice but to follow this method for the purpose of making calculation of the answer. Yes. So over here you will be following this IRR method for the purpose of doing answer. Now what you will do in case of IRR method or yield to maturity method? In case of IRR or yield to maturity method, I suggest to students to do answer in this sequence. Listen to me carefully. YTM/IRR method. In that, working note number 1, calculation of net cash flow series, in bracket I am writing from company point of view. So from company point of view we will prepare a net cash flow series. It is year 0, year 1 to year 9 and 10th year. That is the way we will have the split. We will show the payment of interest. Okay. What is the face value of the security? Face value is 100. What is the rate of interest? It is 10%. So we understand that, say, first of all we will show the payment of interest. $100 into 10%. That comes to an amount of ₹10. जितना भी हम लोग इंटरेस्ट पे करते हैं ना उसके ऊपर अपने को टैक्स सेविंग मिलता है. So we get the interest tax saving. What is the interest tax saving? It is equal to the 30% of the payment of interest. यानी कितना होगा फ्रेंड्स? ₹3 होगा. That is 10 into 30%. Because whatever the interest that we pay is debited to P&L account, and we get the tax saving equal to the income tax rate, जो कि 30% है हमारे एग्जाम्पल में. Okay. Then we'll have the redemption value as cash outflow at the end of the 10th year. That is ₹100. This is what we are required to pay at the end of 10th year. Year 0, we understand that we'll get the issue price. We have been provided with the information about the current market price of the security, that is 105. And we assume that the existing security will be issued at the current market price. Friends, we understand that there are two types of market. One is primary market, another is secondary market. Primary market का मतलब क्या होता है? That this is for the first time when you issue the security, then the price at which you issue the security is considered to be the primary market in which you are issuing the security. We understand that in primary market, the company and the investors are directly connected with one another. Initial public offer is considered to be the primary market. Once the security is issued, after that, one investor is selling the security to another investor. So whatever the transaction in which they are entering into is considered to be the secondary market. So over here, we understand that we assume that an existing company will issue the security at the current market price, which is 105. Next, we will have the flotation cost. We have been provided with the information about the flotation cost. It is 4%. So it is 105 into 4%. That comes to 4 rupee 20 paise. Dear students, this is what's one of the controversial point that we have. As far as the flotation cost is concerned, number of times institute is giving suggested answer wherein it is calculated based on the face value of the security. Sometimes it is calculated based on the issue price of the security. So regarding the flotation cost amount, there is no consistency in providing suggested answer by the institute. Number of times it is on the face value, number of times it is on the issue price. So you can do answer by either of the method and you put a note for the same. This is the way we will have the net cash flow. Okay, in net cash flow what will happen? In the year 0, as a company, I will issue the security for 105 and I will incur a cost of 4 rupee 20 paise. So in the year 0, I will receive an amount of 100.8. This is the net cash flow. Then year 1 to year 9. Every year what will happen? 10 rupees is the payment of interest and 3 rupees is the tax saving. So there is a net payment of rupees 7. That is again the net cash flow. Last year what will happen? Apart from this 7 rupees of the payment, we will have 100 rupees of the additional payment. So that comes to 107. This is the way we will have the net cash flow. Let us have the revision of the working that we have done. Importantly, this is a calculation that we are doing from the company point of view. From the company point of view, when I raise the funds by way of the debentures, I get 105 rupees from the investors. I pay them 10 rupees every year for a time period of 10 years. Whatever amount that I pay to them is debited to profit and loss account. So we get the advantage of the interest tax savings. So we get the tax savings of rupees 3. Last year, the redemption value is paid equal to the face value 100. In the year 0, we have the cost in terms of the flotation cost 4 rupee 20 paise. That is the way we have the net cash flow. Year 0 में हमको कितना पैसा मिलता है? 100.8. Year 1 to year 9 every year हमको कितना पेमेंट करना पड़ता है? 7 rupees. लास्ट ईयर कितना पे करना पड़ता है? 107. That is the way we have say the net cash flow series. और ये जो net cash flow series हुआ friends, for that we are required to find internal rate of return. The internal rate of return is cost of debt financing. This is the way we are required to calculate the answer. Now going ahead, that how to make the computation of IRR. Over here friends, we can understand reasonably, not very precisely. We can say that the answer would be near to 7%, because you can see that every year you pay 7, last year you pay 107, year 0 you have received 100.8, so the answer would be near to 7%. So we can start the calculation of NPV at the rate of 6%, then at the rate of 8%, and then we'll make the interpolation of 6% and 8% in order to compute the IRR. Calculation of NPV at the rate of 6%. We have to go reasonably. Year 0, year 1 to year 9 and 10th year. Year 0, that is cash inflow of 100.8. Year 1 to year 9, it is 7 rupees outflow. Last year it is 107 outflow. This is the cash flow series that we have. Will discount at the rate of 6%. Year 0 factor is 1, of course. Then present value. Over here, year 1 to year 9 factor summation is nothing else but, we understand in simple language, it is PVIFA at the rate of 6% for 9 years. This is the concept that you study in your time value of money at your CPT or a foundation level. PVIF at the rate of 6% for 10th year. 1, 2, 3, 4, 5, 6, 7, 8, 9. So 6.8017. One, 2, 3, 4, 5, 6, 7, 8, 9, 10. 5584. So year 0 it is cash inflow of 100.80. 7 into 6.8017. So 47.61 negative. Last year 107 into 0.5584, that is 59.75. So we'll have the NPV as 100.8 minus 47.61 minus 59.75. So it comes to negative 6.56. That is the way first of all NPV will be calculated, 6.56 negative. It is at the rate of 6%. So NPV is 6.56 negative. Now we'll make the revised calculation of NPV at the rate of 8%. So next is calculation of NPV at the rate of 8%. Again column number 1 is year, column number 2 is cash flow, column number 3 is 8%, and the last column is present value, and based on that NPV will be found. So year 0, that is cash inflow of 100.8. Year 1 to year 9, that is cash outflow of rupees 7. Present value is 100.8. Now for 8%, we'll have the annuity factor for 9 years. 1, 2, 3, 4, 5, 6, 7, 8, 9. 6.2469. 6.2469. 10th year, we'll have outflow of 107. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 0.4632. 7 into 6.2469. So it is 43.73. (107) into 0.4632. 49.56. Okay. So 100.8 minus 43.73 minus 49.56, it comes to 7.51 positive. Yes, 7.51 is positive NPV. We can see that, say, we have negative NPV. Yes. We have positive NPV. Yes. Now we can do interpolation. So calculation of cost of debt financing, cost of capital and NPV. Answer is bound to be very near to 7%, friends. At the rate of 6%, at the rate of 8%. It is 6.56 negative, 7.51 positive. Difference of 6 and 8 is 2. Difference of 6.56 and 7.51 is 14.07. That is the way the difference of NPV and difference of cost of capitals will be found. We take the base of the lower cost of capital usually. It is 6.56. So we understand that it is 6.56 upon 14.07 into 2. 6.56 upon 14.07 into 2. It comes to 0.93%. So the final answer for cost of debt financing is 6 plus 0.93. That comes to 6.93%. That is the way the KD can be calculated. Okay. Next is calculation of the cost of preference share, and for that also the same process will be applied. Next, cost of preference share. In that, so the price is 110. 100 is the face value. Redeemable at par once again. 5% is the coupon rate, means the rate of preference dividend. 2% is the flotation cost, and again 10 years is to the maturity. So heading is calculation of cost of preference share. In that, working note number 1, calculation of net cash flow from company point of view, comma, IRR of which is cost of preference share. So again we will have year 0, then year 1 to year 9 and 10th year. We will show payment of preference dividend. Face value is how much? 100. Rate of dividend is how much? 5%. So it is 100 into 5%. That comes to rupees 5 from first year to 10th year. Redemption value at the end of 10th year, an amount of rupees 100. Then issue price. As I told you friends, that say whatever the price which is prevailing in the secondary market is the price at which you will issue the security in absence of any information. If at all we have been provided with any information about the issue price, the same will have to be taken. However, over here no such clarification is made, so we take the price which is prevailing in the market, that is 110 rupees. Then we understand that there is a flotation cost. What is the amount of flotation cost? It is 2%. 110 into 2%, that comes to 2 rupee 20 paise. 110 into 2%. That is the way we will have the net cash flow. 110 minus 2.10. That comes to 107.8. Friends, over here there is no tax saving that you will receive. Why? Because the payment of the preference dividend is considered to be the appropriation of the income. It is not charged against the income. So we'll keep that 5 rupees as it is. Last year we are required to pay 105. That is the way we will have the net cash flow series. Year 0 there is cash inflow of 107.8. Year 1 to year 9 you pay rupees 5, and 10th year apart from that 5 rupees you pay 100 rupees as a redemption value of the security. Now this cash flow series, for that will compute the IRR. So let us see now the computation of the net cash flow. Year 1 to year 10, 5 rupees of the outflow. Last year it is redemption value of rupees 100. Year 0, 110 rupees is the issue price that you receive as a company. There is a flotation cost of 2 rupee 20 paise. As I just explained it to you earlier, that this flotation cost can be calculated on the face value, is also acceptable, and accordingly we will have the net cash flow. Fine. Going one step ahead, calculation of IRR. Now friends, over here again logically you can understand, you pay 5 rupees every year and 100 rupees apart from that 5 rupees at the end of 10th year. In the year 0 you have received more than 100 rupees. So the answer is bound to be less than 5%. So it will be mostly in between 4% and 5%. It is of course less than 5%, that we can say with an assurance. So we start with the 4%. So calculation of IRR, in that calculation of NPV at the rate of 4%. It is again year 0, it is year 1 to year 9 and 10th year. Net cash flow. Year 0 it is 107.8 inflow. Year 1 to year 9, 5 rupees outflow. And last year there is outflow of 105. We discount the same at the rate of 4%. $7.4353. .6756. Year 0 factor is of course 1. Present value 107.8 inflow 5 into 7.4353, so it is 37.18 outflow. 105 into 0.6756, again outflow 70.94, and based on that NPV will be calculated. 37.18 outflow, 70.94 outflow, and 107.8 inflow, so it comes to just negative 0.32. That is the way the NPV can be calculated. At the rate of 4%, NPV is negative. Now for increasing NPV, will increase the cost of capital. Let us say that instead of 4%, we'll apply 5%. So calculation of NPV, calculation of NPV at the rate of 5%. So it is again year 0, year 1 to year 9, and 10th year. Cash flow. Year 0, there is cash inflow of 107.8. Year 1 to year 9, 5 rupees outflow. Last year it is 105 outflow. Discounting at the rate of 5%. Year 0 factor is 1. Then present value. One, two, 3, 4, 5, 6, 7, 8, 9. 7.1078. One, two. Last year factor is 0.6139. So the present value is 107.8. 5 into 7.1078. That is 35.54. Then 0.6139 into 105. So 64.46. So 107.8 minus 35.54 minus 64.46. It comes to 7.8 positive. Yes. So now we have got two NPVs. One is negative NPV, another is positive NPV. Now we can interpolate both of them. So next is IRR, that is cost of preferential. So cost of capital and NPV. Cost of capital is 4%, at which NPV is negative 0.32. At 5%, it is 7.8. Difference of 4 and 5 is 1. And difference of this two, NPV is 8 rupee 12 paise. Generally, we will take the lower cost of capital as a base. That is 0.32 paise. It is reflected by this much change in the cost of capital. So 0.32 divided by 8.12 into 1. 0.32 divided by 8.12 into 1, that comes to 0.04. That is the way the final answer can be computed. Cost of preference share is 4 plus 0.04. That comes to 4.04%. That is the way the cost of preference share can be calculated. Okay. Now, once the cost of capitals are calculated, we will make the computation of the weighted average cost of capital. First of all, by taking the book value as the basis and then taking the market value as basis. So next is calculation of weighted average cost of capital on book value basis. We will have the source of finance as column number 1, amount as column number 2, weight / proportion as column number 3, cost of capital is the next column, weight into cost, that is the way the weighted average cost of capital will be calculated. Going with the sequence in which the information is given to us, it is debentures, preference and equity. I suggest you not to change the sequence. Debentures, preference shares and equity. The amount is also 5, 5 and 10, simple. It is 5 lakhs, 5 lakhs and 10 lakhs. That is the way the total comes to 20 lakhs. Now, 5 lakhs of the debt financing out of 20 lakh of the total financing. So the weight is going to be 0.25. That is 5 lakhs upon 20 lakhs. Next is again 0.25. And the last will be 0.50. That is the way we will assign the weights, and the total of the weight is of course 1. For the debenture, what is the cost? Let us see. For cost of debenture, it is 6.93. Cost of equity is, I think, 10. It is 10%. Yes, it is 10. So 10 and 6.93. So this is 6.93. This is 10. And this is 4.04 that we have recently calculated. So now weight into cost, weighted average will be found. So now weight into cost of capital, 25% of the funds having a cost of 6.93. So it comes to 1.73. Another 25% of the funds having cost of 4.04. That is 1.01. Then 50% of the funds having cost of 10. So it is 5. So what will happen? 1.73 plus 1.01 plus 5. It comes to 7.74. It is the weighted average cost of capital or it is overall cost of capital. That is the way we will make the computation of the weighted average or overall cost of capital using the book value approach. In case of book value approach, what we are doing, friends, we take the book value of the security for the purpose of computation of the weighted average cost of capital. Now the same process using the market value weights. So calculation of weighted average cost of capital based on market value weights. So again the column number 1 is source of finance. As I suggested to you, preferably do not change the sequence. So we start with the debentures. Second column will be the amount. Now listen carefully. 5 lakhs is the face value divided by 100. That will give us, say, the number of debentures. And what is the market price of the debenture? It is 105. Yes, it is 105. So into 105. So 5 lakhs into 105 upon 100. It comes to 5,25,000. Next is preference shares. In that case, again 5 lakhs divided by 100 into the market price of the preference share is provided as 110. तो कैसे किया जाएगा? 5 lakhs upon 100 into 110. That comes to 5,50,000. Next is equity shares. What is the face value? Face value is 10 lakhs divided by face value of equity share is rupees 10 and market price is 24. Yes, so divided by 10 into 24. That comes to, I think, an amount of 24 lakhs. 10 lakhs upon 10 into 24. 24 lakhs. So 24 lakhs plus 5,50,000 plus 5,25,000. It comes to 34,75,000. So the total is 34,75,000. This is the way first of all we'll compute the amount. Next to amount, it will be weight slash proportion. Next to that, it will be cost of capital. Then weight into cost. That is the way the weighted average or overall cost of capital will be calculated. So over here, 5,25,000 divided by 34,75,000. So it comes to 0.1511. Next, 5,50,000 divided by 34,75,000. So it comes to 0.1583. Next, 24 lakhs upon 34,75,000. So it comes to 0.6906. Now friends, we'll make sure that the total has to be 1. 0.1511 plus 0.1583 plus 0.6906. So the total is 1. If it is not 1, then in that case the last value will be kept as balancing figure instead of making the calculation. Okay, so this is the weight. Multiplying with the cost. As far as the cost is concerned, it is 6.93. Next, it is 4.04. Next, it is 10%. So what will happen? It is 0.1511 into 6.93. That comes to 1.05. .1583 into 4.04. That comes to 0.64. .6906 into 10. That comes to 6.91. Okay. So over here it is 1.05 plus 0.64 plus 6.91 is equal to 8.60. That is the way the weighted average cost of capital can be computed it is 8.60 based on the market value approach, and it is 7.74 with the book value approach. Question number 3. Next question. Xylo Limited is considering two alternative financing plans as follows. Information is given about plan A and plan B. Equity share of ₹10 each, 8 lakhs each of them. Preference share capital 4 lakhs in case of plan B and 12% debentures in case of plan A. The indifference point, this is important, between the plan is 4,80,000 and income tax rate is 30%. Calculate the rate of dividend on the preference share capital. So the question says that what will be the rate of the preference dividend at which the indifference point must be 4,80,000. So taking into account the information about the indifference point, we are required to compute the rate of preference dividend. Let us see that how to make the calculation of answer. Answer of the third question. In that, calculation of rate of preference dividend, it will be computed like this. EPS of plan A is equal to EPS of plan B. Now EPS of plan A is equal to EPS of plan B. In that, we understand that the EPS of plan A is calculated as EBIT minus interest is EBT into 1 minus T is EAT minus preference dividend divided by number of equity shares of A plan is equal to, again, EBIT minus interest is interest into 1 minus T is EAT minus preference dividend, that is earning available to equity shareholders, divided by number of equity shares of B financial plan. Now what is the EBIT value? EBIT value is 4,80,000. So this is 4,80,000 minus amount of interest is 4 lakhs into 12%. Four lakhs into 12%. So EBIT minus interest into 1 minus income tax rate. What is income tax rate? It is only 30%. So into 1 minus 0.30 minus preference dividend is 0 because A financial plan does not have any preferential capital. So it is 0 divided by number of equity shares. Number of equity shares are 8 lakhs upon 10. Because we understand that the 8 lakhs is share capital and face value of equity share is 10. So number of equity shares would be 80,000. So over here 4,80,000, with that we start minus 48,000 is the interest into 1 minus tax rate is 0.70 whole divided by 80,000 shares is equal to, on the other hand, we will have the value 4,80,000 into 4,80,000 minus 48,000, that comes to 4,32,000 into 0.7, that comes to 4,32,000 into 0.7, divided by 80,000. So 3,02,400 divided by 80,000. That comes to 3.78 is equal to, on the right hand side, the amount of EBIT is 4,80,000 minus interest is 0, friends, into 1 minus income tax rate 0.30 minus preference dividend. Again it is 4 lakhs and we assign X variable to the rate of preference dividend. So minus 4 lakhs into X whole divided by number of equity shares are again 8 lakhs divided by 10. So this will be 4,80,000 once again into 1 minus tax rate is 0.70 minus 4 lakhs is preferential capital into X, that is the rate of preference dividend, divided by number of equity shares are 80,000. 4,80,000 into 0.7, that comes to 3,36,000. So 3,36,000 minus 4 lakhs into X divided by 80,000. Okay. So now we understand that, say, the numerator is 3,36,000 upon 80,000, that comes to 4.20. 4.20 minus 4 lakh upon 80,000, 5x. 4.20 minus 5x. So 5x is transferred, so it becomes positive, is equal to 4.20 minus 3.78. 4.2 minus 3.78, that comes to 0.42 divided by 5, that comes to 0.084. That is 8.40%. So this is the rate of preference dividend of the B financial plan. That is what we understand. This is the way we can compute the answer. Next question, question number 4. This is a question from the chapter leverage. The capital structure of PS Limited for the year ended 31st of March 2020 consisted of as follows: equity share capital 10 lakhs, 10% debentures again 10 lakhs. During the year 2019-20, sales decreased from 1 lakh number of units as compared to 1,20,000 in the previous year. However, the selling price stood at the rate of rupees 12 and the variable cost at the rate of rupees 8 for both the years. The fixed expenses were rupees 2 lakhs per annum and income tax rate only 30%. You are required to make the computation of degree of financial leverage at 1,20,000 and 1 lakh number of units. Degree of operating leverage again at both the level of units. Percentage change in earning per share. These are the 3 things that we are required to compute. So we can prepare simply an income statement. Simply we can prepare an income statement at 1 lakh number of units, at 1,20,000 number of units, and in that will make the computation of the earning per share also. so that we can compute easily the percentage change in earning per share. So let us start with answer number 4. Answer of fourth question in that. Working note number 1, calculation of number of equity shares. It is equity share capital divided by face value per share. With that we are going to start. As far as the equity share capital is concerned, it is 10 lakhs and face value is 100. So the equity share capital is an amount of 10 lakhs. Face value is 100. So number of equity shares are 10,000 shares. That is the first working note that we can prepare. Working note number 2. In that we can make the computation of directly earning per share. Calculation of earning per share. Dear students, EPS will be calculated for 1 lakh number of units and for 1,20,000 number of units. Let us see that how to make the calculation of answer. Number of units 1 lakh. Number of units are 1,20,000. We'll prepare the entire statement. So first of all we start with the sales. Number of units that we are going to produce and sell is 1 lakh right now. Selling price per unit is given. That is an amount of rupees 12. So sales value is 12 lakhs. For the new one, sales units is 1,20,000 and selling price is 12. So it is 14,40,000. Next is variable cost. Again number of units are 1 lakh. Multiplying with variable cost per unit is rupees 8. That comes to an amount of 8 lakhs. Next is 1,20,000 number of units into 8 rupees per unit. That comes to 9,60,000. Difference of the sales and the variable cost is contribution. Contribution in the first case will be 4 lakhs. In the second case it will be 4,80,000. The amount of fixed cost. Fixed cost is an amount of 2 lakhs. So contribution minus fixed cost will give the EBIT. In the first case it is 2 lakh. In the second case it is 2,80,000. Next is amount of interest. Question is providing that the debenture is an amount of 10 lakhs and the rate of interest is 10%. So the amount of interest will be 10 lakhs into 10%. So the amount of interest is going to be an amount of rupees 1 lakh. So EBIT minus interest that will give the earning before taxes. earning before taxes is 1 lakh in the first case, and in second case it is 1,80,000. Income tax at the rate of 30%. So the amount of income tax is, in the first case it is an amount of 30,000, in the second case it is 54,000. Next is earning after taxes, that is 70,000 in the first case and 1,26,000 in the second case. Is there any preference dividend? Let us check that. There is no preference dividend, that's fine. Divided by the number of equity shares, which we have computed, it is 10,000 shares. So earning after taxes divided by number of shares, 10,000. Dear students, that will give us EPS. It is 70,000 divided by 10,000. That comes to 7 rupees per share, and 1,26,000 divided by 10,000 shares. That comes to 12.6 per share. That is the way the earning per share can be calculated. Now I am going one by one with the questions. पहला क्वेश्चन ये पूछा है that what is the degree of financial leverage at 1,20,000 number of units and at 1 lakh number of units. That is the question. So the degree of financial leverage, जिसका कैलकुलेशन कैसे किया जाएगा, EBIT upon EBT. What is the amount of EBIT? It is an amount of 2 lakhs. EBT is 1 lakh. So this is 2 lakhs divided by 1 lakh. That comes to 2. On the other hand, it is 2,80,000 divided by 1,80,000. So it is 2,80,000 divided by 1,80,000. So the answer comes to 1.56. Next question में पूछा है calculate the DOL, degree of operating leverage. So next is a calculation of DOL, जिसका कैलकुलेशन कैसे होगा, contribution upon EBIT. Contribution कितना है, it is an amount of 4 lakhs. EBIT कितना है, 2 लाख. So we understand it is 4 lakhs upon 2 lakhs. That comes to 2. On the other hand, it is 4,80,000 divided by 2,80,000. So 4,80,000 divided by 2,80,000. So the answer comes to 1.71. That is degree of operating leverage. Next question. What is the percentage change in EPS? Dear students, the question is providing the information that during the year 1920, sales decreased to 1 lakh number of units, like that information is given, as compared to 1,20,000 number of units. What does it mean? It means that, say, whatever the sales that we had, so that has gone down. तो पिछले साल हमारा EPS कितना होगा फ्रेंड्स, 12.6 होगा. तो ये 12.6 का जो अपना EPS था ना, that has reduced to ₹7. So we are required to compute the percentage change in EPS. तो कैसे होगा, percentage change in earning per share is reduction in earning per share divided by करंट अर्निंग पर शेयर इंटू 100. देखो अभी का EPS कितना है, 12.6 है, वो रिड्यूस होकर कितना हो जाएगा, 7 हो जाएगा. सो वी अंडरस्टैंड इट इज 7 माइनस 12.6 अपॉन 12.6 इंटू 100. तो रिडक्शन कितना आता है फ्रेंड्स 5.6 डिवाइडेड बाय 12.6 इंटू 100. So 5.6 upon 12.6, that comes to reduction by 44.44%. This is the way we are required to make the computation of the answer. Next question, question number 5. It is from the chapter of investment decision. It means that it is a question from the capital budgeting chapter. Let us see a very good question. बहुत ही अच्छा क्वेश्चन है. A large profit making company is considering installation of a machinery to process the waste produced by one of its existing manufacturing process to be converted into a marketable product. At present, the waste is removed by a contractor for disposal on payment by the company rupees 150 lakhs per annum for the next 4 years. The contract can be terminated upon the installation of the aforesaid machinery on payment of the compensation of 90 lakhs before the processing operation starts. This compensation is not allowed as a deduction for income tax purpose. The machinery required for carrying out the processing will cost an amount of 600 lakhs to be financed by a loan repayable in 4 equal installments commencing from end of year 1. The interest rate is 14% per annum. At the end of 4th year, the machinery can be sold for 60 lakhs and the cost of dismantling and removal will be 45 lakhs. Sales and the direct cost of the product emerging from the waste processing for the 4 years are estimated as under. Sales दे रखा है, material consumption, wages, other expenses, factory overhead, depreciation, and importantly it has been given as per income tax rule. तो टैक्स के पॉइंट ऑफ व्यू से कितना डिप्रीशिएशन आप चार्ज कर सकते हो वही हमको क्वेश्चन में डायरेक्टली दे रखा है. Initial stock of the material required before commencement of the processing operation is 60 lakhs at the start of year 1. Start of year 1 का मतलब क्या समझेंगे? Year 0. The stock level of the material to be maintained at the end of year 1, at the end of year 2, at the end of year 3 will be 165 lakhs and stock at the end of year 4 will be absolutely 0. The storage of material will utilize the space which would otherwise have been rented out for 30 lakhs per annum. यानी हमको अपॉर्चुनिटी कॉस्ट का इंफॉर्मेशन दे रखा है. लेबर कॉस्ट इंक्लूड द वेजेस ऑफ द 40 वर्कर्स whose transfer to this process will reduce idle time payment of rupees 45 lakhs in year 1, 30 lakhs in year 2. Factory overhead include apportionment of the general factory overhead except to the extent of insurance charges of 90 lakhs per annum payable on this venture. Income tax rate is only 30%. The present value factor for 4 years are as follows. Year 1 to year 4 discounting factors का information दे रखा है. Advise the management of the desirability of installing the machinery for processing the wastage. All calculations should form part of your answer. That is the question. I request all of you to pause the video, you go through the question properly and then you restart the video. The reason for that is that the content of the question is too many. That is the reason. I am starting the explaining of the question. That is answer of question number 5. Now what is the question about? Let us discuss that. Everybody is requested to pay proper attention. That's a question में हमको क्या दे रखा है वो हम लोग अच्छी तरह से समझते हैं. We'll first of all have an understanding that say what kind of information is given. Information is given like this. that a company is basically manufacturing a product. So this is the kind of product which the company is manufacturing. The question says that when we are doing this processing of the manufacturing of the product, at that time certain waste is generated. Whatever the waste which is generated, for that right now we are having a system in which we dispose of the waste. We dispose of the wastage. We can see that over here information is given to us that at present the waste is removed by the contractor for disposal on payment by the company rupees 150 lakhs per annum. Like that information is given. So over here, say when we dispose of the wastage, at that time we are having a cost of rupees 150 lakhs per annum. This is the cost that we are incurring. Now listen carefully what I am going to speak. The company is considering that a project in which it is considering processing of this wastage. It is considering processing of this wastage, and this waste will be converted into, let us say, a new product. We are going to manufacture a new product. So instead of disposing of the wastage, we are considering further processing of this wastage and to be converted into a new product, that is new marketable product. तो क्वेश्चन यहाँ पे ऐसा है that whether we should do this project or not, in which we are going to further process the wastage instead of disposing of the wastage by incurring a cost of 150 lakhs per annum. Be clear with the information of the question. Decision that we are required to take in the question is that whether to further process the waste or to dispose of the waste at that point of time. That is the question. We can say that we are adopting, like usually in this kind of question, a kind of incremental approach for the decision making. In case of incremental approach, what we will do, in case of incremental approach, we will have an approach like this, that manufacturing, or we can say that further processing of waste over disposing of waste. So this is the decision that we are required to take over here. Fine. Okay, let us have understanding that how we will take that decision. First of all, we'll see that what kind of investment is required to be made. Then we'll see that what is the amount of depreciation, and so on working we are required to do. This is what the decision that we are going to take. I am starting with one by one steps. Generally, I calculate the answer in these steps. Step number 1 is going to be investment. Step number 2 is going to be depreciation. Of course, from income tax point of view. Step number 3 is terminal cash flow. Terminal cash flow means the amount of cash flow that you receive when the project is terminated. It means that's at the end of the 4th year over here. Step number 4 is a recurring cash flow. Recurring cash flow means the amount of the cash flow that you receive, say by doing the business. That is called recurring cash flow. And step number 5 is NPV calculation. These are the 5 steps in which generally I suggest students to do answer. So let us start with one by one steps. step number 1 in that investment. Step number 1 is investment. In that working note number 1, calculation of working capital change. Year is column number 1, working capital is column number 2, working capital change is column number 3. The question is providing the information like this, that initial stock of the material required before the commencement of the processing operation is 60 lakhs at the start of year 1. Means in the year 0, you will have the working capital requirement of 60 lakhs in form of stock. The stock level of the material at the end of year 1 to year 3 will be 165 lakhs. So what will happen? We understand that say at the end of first year it will be 165 lakhs. At the end of second year it is again 165 lakhs. At the end of third year it is again 165 lakhs. And stock level at the end of the fourth year will be 0. So at the end of the fourth year the stock level will be 0. This is the way we will have the working capital. Now I am mentioning the working capital change. Listen carefully. We understand that say year 0 you require the working capital of 60 lakhs, so that is 60 lakhs of cash outflow. Then you require the working capital of 165 lakhs. You already have invested 60 lakhs. So there is an additional working capital requirement of 105 lakhs. Do you get my point? That say you already have invested 60, now you require 165. So additional investment is required to be made of 105 lakhs. Then the working capital requirement is same, that is working capital investment is same, so there is no change. Again there is no change. Then there is recovery of 165 lakhs. This is the way we are required to show the working capital change. ये जो point है friends, that you can connect with the cash flow statement in that say like accounting standard 3, in that say the cash flow statement that you prepare, in that cash flow from operating activities. Cash flow from operating activities can be calculated by two methods. One is direct method, another is indirect method. तो indirect method में हम लोग एक वर्किंग नोट क्या बनाते हैं, वर्किंग कैपिटल चेंज का. अगर इस साल का वर्किंग कैपिटल का रिक्वायरमेंट पिछले साल के मुकाबले ज्यादा है, if at all during this year the working capital requirement is more in comparison to the previous year, then in that case there is cash outflow. इस साल का वर्किंग कैपिटल का रिक्वायरमेंट पिछले साल के मुकाबले कम है, then in that case there is cash inflow. So the same concept is applied by me over here. See 165 is greater than 60 by how much? 105. So देखो ये that is 105 का outflow. ये दोनों तो सेम ही है, so there is no change. ये दोनों तो सेम ही है, so there is no change. यहाँ पे वर्किंग कैपिटल का रिक्वायरमेंट 0 हो जाता है. So we understand that say ये 165 का रिकवरी हो गया. That is the way we are required to show the working capital requirement which is supposed to be incorporated for the purpose of making computation of the cash flows. So this is the working capital change that we have. Okay. Now step number 1 is about the investment. So how to make the computation of investment? Let us see. So calculation of investment in the year 0. In that first of all we will have working capital investment. So in the year 0 we'll have the working capital investment. What is the working capital investment? Working capital investment is an amount of 60 lakhs. Okay. The question is providing that say in order to further process the wastage you need to purchase a machinery. So we'll add purchase price of machinery. that is an additional investment which you are required to make. What is the value of the machinery that you are going to buy? It is an amount of 600 lakhs. So it is 600 lakhs less loan taken. The amount of loan that you have taken is an amount of 600 lakhs. So to that extent, your investment reduces, because language of the question is again absolutely clear: to be financed by loan repayable in 4 equal installments. 4 equal installments commencing from end of year 1. That is the reason, so you will have the 600 lakhs of loan to be taken in the year 0. Next, we understand that say the question is providing the information that say you are required to make the payment of compensation. Let us see that say what kind of information is provided with respect to the compensation. Understand logically that the information is given like this, that the company is having a contract in which the waste is taken away by an agency, and we have a contract that you are required to take away the wastage, and yearly we will pay you an amount of 150 lakhs. Now suddenly we cancel the contract. So the agency says that say as per the contractual agreement that you have with us, you are required to make the payment of compensation when you cancel the contract. The question says like this: the contract can be terminated upon installation of aforesaid machinery on payment of compensation of 90 lakhs before the processing operation starts. So an amount of 90 lakhs is required to be paid in the year 0 when the processing operation starts. Like that information is given. So what happens that's over here, listen carefully. We'll have the payment of the compensation of an amount of 90 lakhs in the year 0. Because many a times what happens at say, let us say for example, that say we obtain the quotations from the number of agencies. फिर जो एजेंसी से का हमको सर्विस ठीक लग रहा है, with that say we are doing a negotiation for the prices. Suppose the agency has quoted that say the price is this amount for removing the wastage, to take away the wastage from your factory, and this amount will increase at the rate of 10% per year. ऐसा उन्होंने कोटेशन भेजा. तो हमने क्या बोला, देखो हम लोग आपको 4 साल के लिए बिजनेस देने वाले हैं. So you do one thing, that say you don't impose any increase on us. Like that say we are having a negotiation with them. उन्होंने क्या बोला कि ठीक है चलो, we are not going to have an increase. However, if at all you cancel the contract in between, you are required to pay the compensation. Okay. So we had agreed at that point of time that say we will make the payment of the compensation if at all we cancel the contract in between. So now we understand that say अगर हमको ये waste को further process करना है and we want to convert that say into a new product, तो हमको ये जो contract है ना, वो contract हमको cancel करना पड़ेगा. क्या? Disposing of the wastage का. उसकी वजह से हमारा ईयरली 150 लाख का सेविंग्स होगा, वो फायदा है. However, the compensation is required to be paid, वो हमारा आउटफ्लो होगा. Again, there is a good clarity made in the question that it is required to be paid before the processing operation starts. It means that so you are required to make the payment in the year 0. दूसरा चीज, listen carefully. The question is clearly providing that it is not allowable as an expense for income tax purpose. So we understand that say इसके ऊपर हमको कोई भी tax effect लेना नहीं है. Okay, going further. So ultimately the amount of investment that we are required to make is an amount of 150 lakhs. कैसे आया? 60 lakhs का working capital, 90 lakhs का compensation, ऐसा करके we are required to make investment of 150 lakhs. Step number 2. Step number 2 is depreciation. In that, how we will do answer? First year, second year, third year and fourth year. Amount of depreciation has been provided to us ready-made. We don't have to do anything, friends. You can see that the depreciation as per income tax rules have been given to us. It is 150, 114. $150, $114, $84 and $63. Importantly, friends, we are required to take into account the depreciation as per income tax rules. Because depreciation is as such a non-cash item, so it is not required for the purpose of cash flow calculation. Yet, it is taken into account. Why? Because it is an allowable expense from tax point of view. First year it is 150, second year it is 114, third year it is 84 and last year it is 63 lakhs. That is the way the depreciation year 1 to year 4 will be calculated. Step number 3. It is an amount of terminal cash flow. जिसमें हम लोग दो चीज लेंगे. One is the sale value of the machinery. We have been provided with the information that it can be sold for an amount of 60 lakhs and cost of dismantling and removal is 45 lakhs. तो हमको नेट कितना मिलता है? 15 lakhs. तो scrap value of the machinery is an amount of 15 lakhs. It is 60 lakhs minus 45 lakhs. Plus, we will get the working capital recovery. Over here, the working capital recovery is an amount of 165 lakhs. So that is an amount of cash inflow at the end of the fourth year. So 165 plus 15, that comes to 180 lakhs. So what we are going to receive is 180 lakhs at the end of the fourth year. Friends, over here, specifically we are solving the revisionary test paper of November 20 of CA Intermediate, in which the notes which have been provided by the institute is that the capital gain tax is ignored. That is the reason over here I am ignoring the capital gain tax. अगर उसको इग्नोर नहीं करना है, if at all we do not have to ignore it, then in that case उसका इफेक्ट कैसे आएगा वो भी मैं आपको समझाता हूँ. Right now for the time being, so I am ignoring the capital gain tax. Step number 4, that is calculation of recurring cash flow. Dear students, so this is the most important step that we have. Calculation of the recurring cash flow is the most important step that we have. In that, year 1, 2, 3, 4. That is with the 4 years, and we are required to start with the working like this. Sales and so on expenses that will write, and accordingly the cash flow will be calculated. So we start with the sales. Sales for the first year is given as 966 lakhs. This is the sales value. So it is 966 lakhs. The next is provided direct material consumption 90 lakhs. So direct material consumption, an amount of 90 lakhs. It is an expense, so I am showing it with the bracket negative. Wages, it is provided to us as 225 lakhs. However, for that is in case of wages, they have provided an adjustment. What is the adjustment? Let us read that. Labor cost include the wages of the 40 workers whose transfer to this process will reduce the idle time payment of 40 lakhs in year 1 and 30 lakhs in year 2. So it has been given to us that there will be a reduction in the idle payment of rupees 45 lakhs in year 1. So from this 225 lakhs direct wages. So from this 225 lakhs we will deduct idle time payment of rupees 45 lakhs in year 1. So minus 45 lakhs in year 1. 225 minus 45. That comes to 180 lakhs. Now what is this idle time payment? I just explained that to you. Let us say that the company is having a product which is manufactured and demand of that product might have reduced in the market. Now because of that, the company has restricted the production of that product. The company has restricted production of that product. Now what happens that there are certain number of workers who come to the factory, they sign the register and they go back in the evening without any work. So we are required to make payment of wages to them without any work that we are able to get from them. We are not able to retrench them. Maybe that the labor laws are very strict, or we are having a fear that there will be overall strike in the factory if at all we retrench them. और ऐसा भी हो सकता है, there is another possibility that they are skilled workers, so we do not want to retrench them. So what happens that these workers will be instructed to come to this new project and do work in this new project. So the question says that if at all we further process this wastage, then in that case whatever the payment of the wages that we were supposed to make otherwise, that will reduce by an amount of rupees 45 lakhs. It means that what will happen, the total number of workers who are working for the new project, ये project में जो सारे number of workers काम कर रहे हैं, total number of workers who are working for the new project, for them the total amount of the wages is 225. However, 45 is in respect of those workers who are supposed to be paid even otherwise. It means that the incremental amount which we are required to pay due to this project is an amount of only 180 lakhs. That is the way we are required to consider the direct wages. Next, other expenses, no adjustment is given, so we'll keep it as it is. Other expense, that is an amount of 120 lakhs. Next, factory overhead. With respect to the factory overhead, an adjustment is given to us again. It has been given that factory overhead include apportionment of the general factory overhead. See, whenever the word allocation, absorption, charge, recovery of overhead, apportionment, these kind of words come, then in that case we have to understand that this is not an incremental expenses that we are required to incur. So the factory overhead include the apportionment of the general factory overhead. It means that we are required to ignore the factory overhead in computation of the cash flow. Except, okay, it means that certain factory overhead is not apportionment. To the extent of the insurance charges of 90 lakhs per annum payable on this venture. What does it mean? It means that factory overhead is relevant to the extent of only 90 lakhs. Factory overhead include apportionment. It means that we are required to ignore it, except means certain expenses are not apportionment, except to the extent of rupees 90 lakhs. That is the insurance premium that we are required to pay. So for factory overhead, we are required to take only 90 lakhs. Next, income tax rate is given, that's fine. Okay. Depreciation, of course, depreciation we are required to keep it as it is. Amount of depreciation is 150 lakhs at the end of first year. Next, listen to me carefully what I am going to speak. Over here the question is providing the information like this. The machinery required for carrying out the processing will cost an amount of rupees 600 lakhs to be financed by loan repayable in 4 equal installments commencing from end of year 1. Interest rate is only 14%. So we are required to make the payment of interest. So on 600 lakhs at the rate of 14%. That comes to an amount of 84 lakhs. Okay, next. The question is providing the information that the storage will utilize the space which would otherwise have been rented out for 30 lakhs per annum. It means that the information is given to us about the opportunity cost. जो जगह पे हम लोग रॉ मटेरियल स्टोर करने वाले हैं वो जगह हम लोग भाड़े पे लगाने ही वाले थे. We were about to let out that portion of the premises. However, now we will not be able to let out the same if at all we are going to continue with this project. So we understand that the 30 lakhs which is required to be paid, 30 lakhs of the income that we were supposed to receive will not be received, and its opportunity cost will be cash outflow. So we will have rental income forgone. That is an amount of 30 lakhs per annum. Next, amount of interest we already have considered it. Now question is providing the information that at present the waste is removed by the contractor for disposal on payment by the company rupees 150 lakhs per annum for next 4 years. Means this 150 lakhs that we were supposed to pay, now we will not pay the same. So we will have savings of waste removal cost. We will have savings of waste removal cost. That is an amount of 150 lakhs. Because this is an expense that we were supposed to incur, we will not incur it now. Okay. Now from the revenue, all these expenses will be subtracted. We'll make the computation of the profit before taxes. Income tax rate is given to us as 30%. Then we'll compute the profit after taxes, that is 70%. Then we'll add back depreciation. Depreciation is added to the profit after taxes in order to make the computation of the CFAT. However, the story does not end over here. Listen carefully what I am going to speak. The question is providing the information that say the amount of loan that we are going to take is 600 lakhs to be repaid in 4 installments. So we will have a repayment of principal, that is 600 lakhs divided by 4, that is 150 lakhs from end of year 1 to end of year 4. That is the principal repayment that we will have. Then working capital change. We have been provided with the information that the 60 lakhs is required at the start of the year, that is at the start of the project, and at the end of the year we require 165 lakhs. So we have computed that there is a working capital change from 60 to 165, so there is an increase of 105 lakhs. So that additional investment is required to be considered at the end of year 1 cash outflow, that is 105 lakhs. This is the way we are required to take into account the cash flows for the purpose of calculating the net cash flow. Now friends, we will make the computation of the cash flow like this. That is one point to which I want to draw your attention is this. See, we will do the working like this: sales minus direct material cost minus direct wages minus other expenses minus factory overhead minus depreciation minus interest minus rental income forgone plus savings of waste removal cost. Based on that, PBT, tax, PAT, add back depreciation to compute the CFAT. Now I incorporate the repayment of principal 150 lakhs. See, I want to tell you importantly that the principal repayment will be shown after CFAT. Working capital change will be shown again after CFAT. Why? The reason for that is very simple. We understand that as far as these things are concerned, that is repayment of the principal and working capital change, they are not allowable expense from tax point of view. They are not an expense. That is the reason it is not required to be considered in calculation of the income tax amount. Okay, so we understand that the cash flow after taxes minus repayment of principal minus working capital change. That is the way finally we will have the cash flow. At the end of the first year, similarly for second year, third year and fourth year, calculation will be made. So let us see calculation of the CFAT. 966 minus 90 minus 180 minus 120 minus 90 minus 150 minus 84 minus 30 plus 150. So the profit before taxes comes to 372. Then income tax payment at the rate of 30%. So into 0.30, 111.6. Next. So 372 minus 111.6, it comes to 260.4. Then we add back the depreciation. Depreciation for the first year it is 150. Depreciation is 150. 260.4 plus 150. That comes to 410.4. Minus repayment of principal 150 minus working capital investment 105. So we end up with the cash flow 155.4. This is end of year 1. Dear students, if at all you are doing answer along with me, then for second year you try to do answer, then you verify the working that I have done. Second year, the amount of sales is 966 and for the remaining 2 years it is 1254. So over here it is 966, then it is 1254 third year, 1254 fourth year. Direct material consumption, it is 120, then 255 for the remaining 2 years. So it is 120 then 255 for the third year and 255 for the fourth year. Direct wages. Direct wages will be, it has been provided to us over here that 30 lakhs in the year 2 idle time payment. So over here from this 255, 30 will be subtracted. So from 255, so 225, 30 is subtracted. 225, 30 is subtracted. So in that case it comes to 195. Then it is 255 and then 300. It is 255 and then 300. Because for the remaining 2 years no adjustments are given. तो हम लोग क्या मानेंगे? We'll assume that say whatever the expenses which have been provided to us are the expenses which are incurred for the purpose of further processing of the vestige. Regarding other expenses also no adjustments are given. So whatever the expenses provided to us itself is incurred. 135, 162 and 210. So it is 135, 162 and then 210. Factory overhead, every year it is only 90. We have to ignore whatever the factory overhead which is given to us in the question and will take say the 90 lakhs per annum. Depreciation is again given to us 114, 84, 63. It is 114, then it is 84 and then it is 63. Amount of interest 600 minus 150. So on 450 lakhs we are required to pay interest at the rate of 14%. Then again 150 is subtracted, so it is 300 lakhs into 14%. Again 150 is subtracted, so on 150 lakhs at the rate of 14%. 450 into 0.14, that comes to 63 lakhs. 300 into 0.14, that comes to 42 lakhs. 150 into 0.14, that comes to 21 lakhs. That is where the interest will be subtracted. Rental income forgone will be an amount of 30 lakhs only. Dear students, sometimes students are coming with the question to me that sir, ये एक notional income है जो हमने forgo किया है. Then in that case, why do we consider the tax effect on it? Giving reply to that kind of small question to which I come across number of times, that if at all we would have received the rental income, we would have made payment of income tax on it. That is the reason this is an item which is considered to be subject to taxation. That is the reason it is required to be returned before you compute the income tax amount. Savings of waste removal cost, again 150 lakhs is the savings on per annum, year 1 to year 4. Accordingly, we will calculate the PBT tax, PAT, add back depreciation. It is 114, 84, 63. So it is 114, then it is 84 and then it is 63. Repayment of the principal will be same every year, 115. Second year there is no additional investment in the working capital. Third year there is no additional investment in working capital. Fourth year end we are able to recover the investment that we have made. Dear students, we already have considered effect of the recovery of the working capital in step number 3 over here. That is the reason I am ignoring the effect of the working capital recovery in the recurring cash flow. Recurring cash flow में यहाँ पे मैं 165 lakhs का इफेक्ट नहीं ले रहा हूँ. क्यों? क्योंकि मैंने ऑलरेडी स्टेप नंबर 3 में उसका इफेक्ट ले लिया है. This is the way we are required to calculate the answer. So let us solve it now. 966 minus 120 minus 195 minus 135 minus 90 minus 114 minus 63 minus 30 plus 150. So profit before taxes is 369. Income tax rate is 30%. So 110.7. So profit after taxes is 258.3. So 258.3 plus 114, that comes to 372.3 minus principal repayment 150, that comes to 222.30. This is the cash flow for the second year. Third year, 1254 minus 255 minus 255 minus 162 minus 90 minus 84 minus 42 minus 30 plus 150. So the profit comes to 486 into 0.30. So the income tax amount is 145.8. It is subtracted from 486. So it is 340.2 plus 84, 424.2 minus 150, that comes to 274.2. That is the recurring cash flow for the third year. Fourth year, 1254 minus 255 minus 300 minus 210 minus 90 minus 63 minus 21 minus 30 plus 150. So it is 435. Into 0.30. So 130.5. It is subtracted from 435. So 304.5 plus 63. That comes to 367.5 minus 150. It comes to 217.5. That is an amount of the cash flow that we have at the end of the fourth year. Now simply we are required to do step number 5, NPV calculation. So step number 5, calculation of net present value. Whatever the cash flows that we are going to receive in future will be discounted in present value term. First year end, it is 155.4. Second year it is 222.30. Third year it is 274.2. Last year it is 217.5. Plus we'll get the terminal cash flow of 180, which we have computed in step number 3. So 217.5 plus 180. So it is 397.5. Now this cash flow will be discounted at the rate of what? 14%. Cash flows discounted at 14%. Will get the present value. Whatever the present value of the cash inflow that we have, From that, so we will deduct the investment. How much investment that we are required to make? For that, so we already have done working over here in our step number 1. The amount of investment that say we are going to make is 150 lakhs. So from present value of the cash inflow, we'll deduct the amount of investment, that is 150 lakhs. Difference of that is the NPV. That is the way the NPV will be calculated. The discounting factors information have been given to us. First year 0.877, second year 769, 674, 592. .592 last year. First year it is 0.877. Second year it is 769. Third year it is 674. So 155.4 into 0.877. That comes to 136.29. 222.30 into 0.769. So 170.8, 170.95. 274.2 into 0.674. That is 184.81. 397.5 into 0.592. 235.32. So 136.29 plus 170.95 plus 184.81 plus 235.32, that comes to 727.37 minus 150. That is the way the NPV comes to 577.37. That is the way the simple NPV of the project can be calculated. As NPV is positive, so the company is advised to further process the wastage. So the decision is as NPV is positive, comma, the company should further process the wastage. That is the way we are required to write answer over here. I just give a small summary of this very simple question. This is a question which is provided to you in the revisionary test paper. So there is no ambiguity, there is no doubt that you need to have now that ऐसे लंबे क्वेश्चंस एग्जाम में क्या पूछ सकते हैं? देखो पूछ ही सकते हैं ना. Once they have provided in the revisionary test paper, it means that there are chances that these kind of questions can be asked in examination. Step number 1 is investment. सबसे पहले हमने ये समझा कि क्वेश्चन का डिसीजन मेकिंग क्या है. क्वेश्चन का डिसीजन मेकिंग ये है that say basically we are producing a product. In production of that product, certain waste is generated. अभी हमारा क्या है, सिर्फ like we have an agency who takes away this wastage and we pay them 150 lakhs per annum. खत्म हो गया बात. Now we are considering to further process the wastage and to manufacture a new product. तो क्या ये करना चाहिए? That is the question. और वो पढ़ने के लिए हम लोग ये क्वेश्चन कर रहे हैं. For the purpose of the decision making, there are 5 steps in which we do answer. सबसे पहले इन्वेस्टमेंट कितना करना पड़ेगा ईयर 0 में. डिप्रीशिएशन टैक्स के पॉइंट ऑफ व्यू से हम लोग कितना क्लेम कर सकते हैं. एट द एंड ऑफ द 4th ईयर जब हमारा प्रोजेक्ट खत्म हो जाएगा तो कितना टर्मिनल कैश फ्लो मिलेगा. मोस्ट इंपॉर्टेंटली हमारा रिकरिंग कैश फ्लो क्या होगा. एंड लास्टली सिर्फ समराइज वर्किंग हो रहा है एनपीवी का। इन्वेस्टमेंट में हमने सबसे पहले एक छोटा सा वर्किंग नोट बनाया। द वर्किंग नोट दैट वी हैव प्रिपेयर्ड इज वर्किंग कैपिटल चेंज। We have been provided with the information that what amount of the working capital is required in the question. It is 60 lakhs in the year 0, then 165 lakhs first year to third year, and then 0 at the end of the fourth year. So what is the working capital change? Year 0 there is cash outflow of 60, then difference of this is cash outflow 105. Difference of this is 0, so there is no change in the working capital. Difference of this is 0, so there is no change in the working capital. Difference of this is the recovery of 165. The next is the calculation of the investment to be made in the year 0. In that, working capital investment 60 lakhs. Purchase price of the machinery, for that the investment is required to be made, however you take loan of 600. Sometimes students have a point to ask me that, sir, can we ignore both of them? Is that fine if at all we do not write either of them? Yes, you may do not write either of them. Why? Because the inflow itself is outflow. Compensation which is required to be paid when you initiate the project. Compensation is required to be paid. Why? Because we are cancelling the contract in between. So in the year 0 you are required to make investment of 150 lakhs. Step number 2 is depreciation. Year 1 to year 4 every year you are required to claim the depreciation of this amount. Step number 3 is terminal cash flow, which you are going to receive year 4 end. Scrap value of the machinery net of the cost of dismantling and removal is 15 lakhs. That is working capital recovery of 165 lakhs over here. So the total cash inflow is 180 lakhs, that is at the end of the fourth year. The most important is the recurring cash flow. You start with the sales, direct material consumption, note that is simple, absolutely nothing is important. Direct wages is important. Why? Because the direct wages expenses includes an amount of idle time payments. So idle time payment will be reduced and only the incremental outflow will be mentioned. Other expenses, that is an amount of 120 lakhs. Factory overhead, in that again an important adjustment is given, that factory overhead include the apportionment except, means certain expenses are not the location. Which is that? That is the insurance expense. How much? 90 lakhs per annum. Depreciation, again it is given to us, nothing is great in that. Amount of interest, just make sure that you do not ignore it, you do not forget it. Because what happens at say, these kind of questions are such questions in which as a student you understand at say question kaise karna hai. However, sometimes for the sequence of the question you are confused in examination, और उसके लिए आपको writing practice चाहिए. नवकार में जो examinations लिया जाता है, those examinations are going to really help you to execute these answers. Rental income foregone is again cash outflow. We understand that say हमको rental income मिल सकता था, नहीं मिल रहा है, वो outflow हो गया. वेस्ट रिमूवल का खर्चा होने वाला था, नहीं हो रहा है, सो इट इज कैश इनफ्लो. Then repayment of the principal, that is required to be shown later on. The reason for that is very simple. It is not an expense which is allowable from tax point of view. Working capital change that we are required to show as outflow, again after considering the tax effect, and then net cash flow. Now one more thing, as I told you that say the suggested answer is provided by them, in that say they have ignored the capital gain tax effect. The question as such is not providing that kind of clarification. So if at all as a student you want to incorporate the effect of the capital gain or loss, then in that case what you will do, I just explain that to you. In step number 3, when you compute the terminal cash flow, in that, you will have working note number 1, calculation of capital gain or capital loss on sale of machinery. This is what you are required to do. In that, the scrap value of machinery, we understand that the 60 lakhs is the sale value of the machinery and cost of dismantling and removal is an amount of 45 lakhs. It means that the scrap value of the machinery, what you get is 15 lakhs minus return down value. 600 lakhs was the price at which you purchased the machinery, minus 150 lakhs first year depreciation, then 114, 84 and 63. So 114, 84 and 63. 600 minus 150 minus 114 minus 84 minus 63. So the WDV comes to 189. So 15 minus 189. So that is a capital loss, 174. So we are required to consider the loss tax saving on this amount. That is required to be considered as a cash inflow at the end of the 4th year, and to that extent NPV of the project will increase. This is what we are required to do. Okay. Next question, question number 6. Management of the receivable. A company wants to follow more prudent policy to improve sales for the region which is 9 lakhs at present, having an average collection period of 45 days. So we are considering that to change in the credit period so that we will be able to increase the sales. Right now the collection period is 45 days. After certain researches, the management consultant of the company reveals the following information. There are 4 credit policies which have been given to us. There is an increase in the collection period, 15 days, 30 days, 45 days and 70 days. Increase in sales is given to us, and percentage default anticipated means bad debts information is given. The selling price per unit is 3, average cost per unit is 2 rupee 25 paise, variable cost per unit is rupees 2, current loss on account of bad debts is 1%, the required return on additional investment is 20%. Assume that there are 360 days in a year. Analyze which of the above policy would you recommend for adoption. It means that the information is given to us that if at all we increase the credit period, then sales of the company will increase. So should we offer the new credit period to the customers or should we stick to the existing credit period? That is what we are required to decide. So basically over here, this is a question in which we are required to take the decision that what the company should do. The company should continue with the existing credit policy or the company should offer the new credit policy to the customers. That is the decision that you are required to take. Fine. Dear students, over here in case of the receivable management we study, let's say there are 3 methods of the decision making. The first method is the total profit or loss approach. Second method is incremental approach. And the third is total relevant cost approach. Like that, there are 3 methods that we have for decision making. Incremental approach can always be adopted for any question of the receivable management. Total relevant cost approach can be adopted only if the sales value is same. However, over here the sales value is changing, so the third approach cannot be adopted. First approach can be adopted if the existing sales and the revised sales have been given. With that, the variable cost or the total cost information is given. Yes, we understand that say both the conditions are satisfied. हमको यहाँ पे existing sales भी दे रखा है, नया sales भी दे रखा है. हमको यहाँ पे variable cost भी दे रखा है, total cost भी दे रखा है. So of course we can adopt the total profit or loss approach for decision making. In that say generally I tell students to do answer by adopting 3 simple steps. पहला स्टेप होगा जिसमें हम लोग टोटल फिक्स कॉस्ट का कैलकुलेशन करेंगे. आई जस्ट गिव यू सम एक्सप्लेनेशन. जैसे कि अभी का सेल्स है अपना 9 लाख, सेलिंग प्राइस पर यूनिट इज 3, सो नंबर ऑफ यूनिट्स है 3 लाख. एवरेज कॉस्ट पर यूनिट है 2 रुपी 25 पैसे एंड वेरिएबल कॉस्ट इज 2 रुपीज. तो डिफरेंस कितना हुआ 25 पैसे. सो 3 lakhs इंटू 0.25, so the fixed cost comes to 75,000. That is the step number 1 and so on. आगे के steps हम लोग कर सकते हैं. So over here answer of question number 6. सबसे पहले मैं एक छोटा सा नोट लिख रहा हूं सिर्फ समझने के लिए. एग्जामिनेशन में ऐसा कुछ लिखने का जरूरत नहीं है. सिर्फ नवकार में हम लोग ऐसा कुछ एडिशनल आपको सर्विस देने का एफर्ट करते हैं. In this question, we have to decide whether the company should continue with existing credit period or it should offer new credit period to customers. Full stop. Information is given about existing sales, comma, new sales and variable cost slash total cost. So we can adopt total profit or loss approach for decision making. ऐसा करके हमको यहां पे डिसीजन लेना है. Step number 1, investment. I'm sorry. Step number 1, calculation of total fixed cost. In that, working note number 1, calculation of existing sales units. It is sales upon selling price per unit. Sales is 9 lakhs divided by selling price is 3. That comes to 3 lakh number of units. After computing the sales units, we'll compute the total fixed cost. Calculation of total fixed cost कैसे किया जाएगा? Total cost is equal to टोटल वेरिएबल कॉस्ट प्लस टोटल फिक्स कॉस्ट. नंबर ऑफ यूनिट्स कितने हैं? 3 लाख. कॉस्ट पर यूनिट कितना है? 2 रुपी 25 पैसे. So 3 lakhs into 2.25, that is provided to us as average cost per unit, or we understand it is the total cost per unit. Total variable cost is again 3 lakh number of units into 2 plus total fixed cost will be found as balancing figure. So 3 lakh into 2 rupee 25 paise, so it comes to 6,75,000 is equal to 6 lakhs plus total fixed cost. 6,75,000 minus 6 lakhs, that comes to an amount of 75,000. तो हमारा जो पहला स्टेप है उसमें हम लोग टोटल फिक्स कॉस्ट का कैलकुलेशन करेंगे. दैट कम्स टू एन अमाउंट ऑफ 75,000. स्टेप नंबर 2, कैलकुलेशन ऑफ वेरिएबल कॉस्ट टू सेल्स रेशियो. डियर स्टूडेंट्स, वी नो दैट से विद द चेंज इन द रेवेन्यू टोटल फिक्स कॉस्ट इज नॉट गोइंग टू चेंज, इसलिए हम लोग सबसे पहले टोटल फिक्स कॉस्ट का कैलकुलेशन करते हैं. फिर विद द चेंज इन द रेवेन्यू वेरिएबल कॉस्ट इज ऑल्सो गोइंग टू चेंज. कौन से प्रपोर्शन में, उसका कैलकुलेशन स्टेप नंबर 2 में किया जाता है. सो इन स्टेप नंबर 2 वी कंप्यूट द वेरिएबल कॉस्ट टू सेल्स रेशियो. वेरिएबल कॉस्ट पर यूनिट अपॉन सेलिंग प्राइस पर यूनिट. सो इट इज 2 divided by 3. For every 3 rupees of the selling price, variable cost is 2. So 2 divided by 3, that is variable cost to sales ratio. Step number 3, calculation of the profit or loss. Now what we will do for each of the credit period, we'll compute the profit or loss. Right now the collection period is provided to us in the example 45 days. Then it will increase by 15 days, by 30 days, by 45 days, by 70 days. So we'll mention the different credit period. हर एक क्रेडिट पीरियड के ऊपर हम लोग सेल्स लिखेंगे एंड देन द प्रॉफिट और लॉस विल बी कैलकुलेटेड. So over here we'll have the working like this. Average collection period, right now it is 45 days. Then it will increase by 15 days. So 45 plus 15, that comes to 60 days. It is 45 plus 15. Then it will increase by 30 days. 45 plus 30, that comes to 75. Then 45 days. 45 plus 45, that comes to 90 days. Then 70 days. 45 plus 70, that comes to 115. That is how we will mention the credit period, and with that the profit or loss will be found. So we have the different credit period 45, 60, 75, 90 and 150. Okay, we'll start with the sales value. Right now the sales value is 9 lakhs. Variable cost is 2/3 of the revenue. So what will happen, friends? It is 9 lakhs into 2 by 3. That comes to 6,30,000. I'm sorry, 6 lakhs. That is the way variable cost will be found. Fixed cost is an amount of 75,000, which we already have found above. This is the fixed cost. Then importantly we will have the carrying cost. As far as the carrying cost is concerned, carrying cost will be calculated as total variable cost plus total fixed cost divided by 360 days into average collection period into cost of capital. This is the simple formula to be applied. This is the minimum income that you desire from the business, taking into account the investment that you have made. Variable cost कितना है 6 लाख, fixed cost कितना है 75,000 divided by 360. अभी का collection period कितना है 45 days, multiplying with the cost of capital. Cost of capital कितना है 20%. So into 0.20. So 6 lakhs plus 75,000 into 45 into 0.2 divided by 360. That comes to 16,875. It is 16,875. That's it. Next is the bad debts. The question is providing that say right now the loss on account of bad debts is 1%. So what will happen? Amount of sales is 6 lakhs. Sorry, 9 lakhs. Amount of sales is 9 lakhs. Into loss on account of bad debts is 1%. That comes to an amount of 9,000. Okay. Now all these expenses will be subtracted from revenue. So sales value is 9 lakhs minus variable cost is 6 lakhs minus fixed cost is 75,000. Carrying cost is 16,875. Bad debts is 9,000. So there is a profit of 1,99,125. 1,99,125. That is the way the profit can be calculated. If at all we increase the credit period from 45 days to 60 days, then what will happen? Sales of the company will increase by an amount of rupees 60,000. Yes. So over here the sales is right now 9 lakhs, it will increase to 9,60,000. So the sales which is 9 lakhs right now will increase by 60,000. Variable cost is 2/3 of the revenue. 9,60,000 into 2 by 3. It comes to 6,40,000. Amount of the fixed cost is going to remain same, 75,000. Carrying cost will be calculated as 6,40,000 plus 75,000 divided by 360 into credit period 60 days into cost of capital 20%. That comes to 23,833. That is the carrying cost. Loss on account of bad debts is going to be 1.5%. Okay. So it is 9,60,000 into 1.5%. That comes to 14,400. $9,60,000 into 1.5%. That is how we will have the final answer. Sales 9,60,000 minus variable cost 640 minus fixed cost 75. Carrying cost is 23,833. Bad debts 14,400. With that, so we have the profit 2,06,767. Dear students, if at all we adopt the incremental approach, then in that case there will be an additional profit of 7,642, that is difference of 2,06,767 and 1,99,125. This is the way the incremental profit or loss can be calculated. Okay. Now after 60 days, 75 days, sales of the company increases by 90,000. Okay. So from 9 lakhs it will increase to 9,90,000. Variable cost is 2/3. 9,90,000 into 2/3. That comes to 6,60,000. Then fixed cost, that is an amount of 75,000. Carrying cost by using the same formula. Variable cost is 6,60,000. Fixed cost is 75,000 divided by 360 into 75 days into 20%. 6,60,000 plus 75,000 into 75 into 0.2 divided by 360. That comes to 30625. Bad debts. Loss on account of bad debts is 2% now. So sales value 9,90,000 into 2%. That comes to 19,800. This is the way we will compute the answer. 9,90,000 minus 6,60,000 minus 75,000 minus 30625 minus 19,800. So it results into a profit of 2,04,575. That is the profit. Next, credit period of 90 days. Let us see. Sales of the company will increase by 1,50,000. So 9 lakh plus 150, that comes to 10,50,000. So over here, $10,50,000 into 2/3, it comes to 7 lakhs. Fixed cost no change, 75,000. Variable cost 7 lakhs. Fixed cost 75,000 divided by 360 into credit period is 90 days into 20%. That comes to 38750. Then there will be again loss on account of bad debts. How much? 3%. So 10,50,000 into 3%. It comes to 31,500. Okay. So what will happen? Sales value 1050 minus 7 lakhs minus 75,000 minus 38750 minus 31,500. So it comes to again a profit of 2,04,750. This is the profit. The last credit period, that is 115 days, wherein we increase the collection period by 30 days. Sorry, by 70 days. In that case, the sales will increase by 2,10,000. So over here we understand it is 9 lakhs plus 2,10,000. It comes to 11,10,000. Variable cost 11,10,000 into 2 by 3. 7,40,000. Fixed cost 75,000. Carrying cost will be 740 plus 75,000 divided by 360, multiplying with the collection period 115 days into 0.20. 7,40,000 plus 75,000 into 115 into 0.2 divided by 360. That comes to 52,069. Next is loss on account of bad debts, that is 4%. So 11,10,000 into 4%. That comes to 44,400. So 11,10,000 minus 7,40,000 minus 75,000 minus 52,069 minus 44,400, that comes to 1,98,531. That is the amount of profit. So dear students, we are required to make the computation of the profit or loss for each of the credit period. Starting from 45 days, say that is the credit period that we have right now, to 115 days, say that is the maximum credit period which we are considering to offer. In every situation we have a profit. Of course, we are interested to have the highest profit. So we understand that say this 2,06,767 will be selected. So we'll advise the company that you should offer a credit period of 60 days to the customers. 60 days is the time period for which the credit should be offered to the customers. So we'll write the final answer like this. The company should offer credit period of 60 days to customer. Friends, if at all we adopt the incremental approach, then in that case, difference of this two value will be the incremental profit or loss. Difference of this two value will be the amount of incremental profit or loss. And of course, we will have the same decision that say in this option we will be having say the highest incremental profit. So we advise the company to offer a credit period of 60 days to the customers. This is what we understand. Question number 7. Next question. A&R Limited is considering one of the two mutually exclusive proposals, Project X and Project Y. So there are two projects which are under consideration, which require the cash outlay of 42,50,000 and 41,25,000 respectively. The certainty equivalent CE approach is used in incorporating risk in capital budgeting decisions. The current yield means return on government bond is 5.5%, and this is used as risk-free rate of return. The expected net cash flows and their certainty equivalent are as follows. For project X, information is given, for project Y, information is given. Year 1 to year 5 cash flows have been given, C factors have been given. Similarly, for project Y, information is given. The present value factor for 5.5% is given. Determine the project that should be accepted. That is the question. It means that, say, over here we are required to make the computation of the NPV for project X. We are required to make the computation of NPV for project Y. And based on that, say, we are required to take the decision that which project should be accepted. As far as the C factor is concerned, it will be multiplied with the cash flows. Product of both of them is the risk-free cash flow. That risk-free cash flow will be discounted with the risk-free rate of return. And with that, so we'll make the calculation of NPV. ऐसा simple process यहाँ पे करना है. Cash flows into C factor will give the risk-free cash flow. Means this is the amount of the certain cash flow that you are going to receive from the project, and that will be discounted at the risk-free rate of return. So we understand that, say, answer of question number 7. In that, calculation of NPV of project X. Column number 1 is year, column number 2 is cash flow, column number 3 is C factor, column number 4 is risk-free cash flow, column number 5 is risk-free rate of return 5.5%. Risk-free cash flow is discounted at the rate of 5.5% to compute the present value. From present value of the cash inflow, investment is deducted to compute the NPV. This is a simple process that we are required to adopt. So now NPV for project X. First year cash inflow is 16,50,000. Year 1 cash inflow is 16,50,000. Second year it is 15 lakhs. Third year is also 15 lakhs. Fourth year 20 lakhs and fifth year 21 lakhs. Okay. Now certainty equivalent factor 87546. 8, 7, 5, 4 and 6. Means out of every 1 rupee of the cash flow, you are certain to the extent of 80% in the first year. So 16,50,000 into 0.8, it comes to 13,20,000. That is the risk-free cash flow. $15 lakhs into 0.7, 10,50,000. 15 lakhs into 0.5, that comes to 7,50,000. 20 lakhs into 0.4, that comes to 8 lakhs. 21 lakhs into 0.6, it comes to 12,60,000. Now this risk-free cash flow will be discounted with the risk-free rate of return, for which again the factors have been given to us in the question. 947, 898, 851, 807 and 765. Last year it is 765. 0.807 for the second last year. First year it is 0.947. Second year it is 898. Third year it is 851. Fourth year it is 0.807 and last year it is 765. Okay. 13,20,000 into 0.947. It comes to 12,50,040. $10,50,000 into 0.898. That comes to 9,42,900. $7,50,000 into 0.851. 6,38,250. 8 lakhs into 0.807. 6,45,600. 12,60,000 into 0.765. 9,63,900. The total of all of them is the present value of the cash inflow. So 12,50,000 40 plus 9,42,900 plus 6,38,250 plus 645,600 plus 9,63,900. It comes to 44,40,690. 44,40,690. This is the present value of the cash inflow. Less investment. Okay, what is the amount of investment to be made? It is 42,50,000. Okay, 42,50,000. And difference of that is we understand NPV. So the amount of NPV is 1,90,690. That is NPV of the project. Yeah. After making calculation of the NPV for the project X, we'll do the similar working for Y. So calculation of NPV for project Y. That is what we have to do. Again, column number 1 is year. Column number 2 is cash flow. Column number 3 is certainty equivalent factor. Then risk-free cash flow. That is cash flow into CE factor. It is discounted at the risk-free rate of return. And finally, we will have the present value. From present value of the cash inflow, investment is deducted to find NPV. First year, the amount of the cash inflow is 16,50,000. Second year same. Then 15, 10 and 8. So first year 16,50,000. Second year it is again 16,50,000. Third year it is an amount of 15 lakhs, 10 lakhs and 8 lakhs. So it is 15 lakhs, 10 lakhs and last year it is 8 lakhs. Okay. Multiplying with the respective CE factor 98789. So it is 98789. So the cash flows into CE factor will give the risk-free cash flow. $16,50,000 into 0.9, 14,85,000. 16,50,000 into 0.8, 13,20,000. 15 lakhs into 0.7, 10,50,000. Then it is 8 lakhs. Then it is 7,20,000. It is discounted at the rate of 5.5%. Factor is 0.947, 898, 851, 807 and 765. 807 and 765. First year it is 0.947. Second year it is 0.898. Third year it is 0.851. Okay. So now present value 14,85,000 into 0.947, 14,06,295. 14,06,295. 13,20,000 into 0.898, 11,85,360. 10,50,000 into 0.851, 8,93,550. 8 lakhs into 0.807, 6,45,600. 7,20,000 into 0.765, 5,50,800. Present value of the cash inflow 1406,295 plus 11,85,360 plus 8,93,550 plus 6,45,600 plus 5,50,800. So it is 46,81,605. Less investment. The amount of investment is 41,25,000. And difference between both of them will be NPV. This is 41,25,000. So minus 41,25,000. And answer of that comes to positive NPV of 5,56,605. Okay. Now we have got two NPVs. For the first option it is 1,90,000 only. In the second case it is 5,56,000. So we understand like this. Project X and Project Y. Net present value 5,56,605. And for X project 1,90,690. 1,90,690. Dear students, for both the options the NPV is positive. However, of course we are required to select the higher positive NPV, so we'll advise the company to go for Project Y. That is the way we are required to take the decision. The company is advised to select Project Y. This is the way we are required to write the answer. Next, question number 8. The following information is given for QB Limited. Earning per share is 120. Dividend per share is 36. Cost of capital is 15%. Internal rate of return is 20%. Calculate market price per share using Gordon formula, using Walter formula. Like that, say by using these two methods, we are required to make the computation of the market price of the equity share. So let us see that say how to make the calculation of the answer. This is a question from the chapter of the dividend policy. Answer of question number 8. We are required to compute the market price of the share using the Gordon model and using the Walter model. That is the question. Earning per share is given to us in the question 120. Dividend per share is given to us an amount of 36. So the retained earning, the term retained earning stands for EPS minus DPS. 120 minus 36, that comes to 84. Then we understand retention ratio. Retention ratio is B. How much profit do you retain? You retain 84 rupees out of 120 rupees that you earn. So 84 divided by 120. That comes to 0.70. Our rate of earning is given to us in the question. It is 20%. Then cost of equity is given to us in the question. It is 15%. See, there is nothing great that I have done. I have just mentioned the information of the question over here in this table. EPS is given 120 rupees. DPS is given 36. So retained earning, based on that's the retention ratio. R is given and K is given. Now listen to me carefully what I am going to speak. As far as the P0 is concerned, using the Gordon model is concerned, the formula is very simple. The formula is like this. P0 is equal to D1 divided by K minus C. Do you have dividend? Yes. Do you have K? Yes. Do you have growth rate? No. Okay, compute it. So we'll compute the growth rate as B into R. B stands for retention ratio. How much do we retain? We retain 70% of the earning. And what is the rate of earning of the company? 20%. So 70% of the funds is reinvested in the business and it is able to give the rate of earning of 20%. So 0.7 into 0.2, that comes to 0.14. So we have the growth rate of 14%. That's it. What is dividend amount? Dividend amount is 36. Divided by cost of equity 15%, less growth rate is 14%. So the market price of the share is rupees 3,600. That is the way the price of equity share can be computed by using the Gordon model. I repeat the explanation again, friends. Most of the information have been given to us in the question. EPS is given, yes. DPS is given, yes. So retained earning is the difference of both of them. You retain 84 rupees out of 120 rupees that you earn. It means that you retain 70% of the earning. Your rate of earning is 20%. So whatever you retain, on that you earn at the rate of 20%. So product of both of them is your growth rate, which is 14%. For P0, very simple formula, D1 divided by K minus C. So with that the P0 is 3,600. Next, Walter model. Dear students, we know that as far as the Walter model is concerned, with that so the formula is very simple again. P0 is equal to dividend per share plus earning per share minus dividend per share into R upon K whole upon K. This is the simple formula that we have. Okay, what is the amount of dividend per share? It is 36 rupees. So we understand that the amount of dividend per share is rupees 36. Plus EPS minus DPS, it means retained earning, it is 84 rupees into R, that is rate of earning is 20%, divided by cost of equity is 15%, whole divided by 15%. So what will happen? It is 84, listen carefully, into 0.20 divided by 0.15. So that answer comes to 112 plus 36. So the numerator comes to 148 divided by 0.15. That comes to 986.67. So the market price of the equity share is 986.67 by using the Walter model. So just summarizing the answer, earning per share हमको दे रखा है 120 rupees and 120 rupees. Dividend per share is also given. Retained earning is found as balancing figure, that is EPS minus DPS. Retention ratio, that is amount of retained earning upon EPS. है ना, logically क्या 120 में से आप 84 retain करते हो. So for every 1 rupee of the earning, how much do you reinvest in the business? 70 paise. Rate of earning again is given to us in the question 20%. Cost of equity is also given. हमने एक कैलकुलेशन किया जो हमको दे नहीं रखा है, that is growth rate, that is B into R. वो कितना आया 14%. And finally we got the P0, that is D1 divided by K minus G. With that, say the price of equity share is calculated. In case of Walter model, we'll apply the simple formula like this: dividend plus earning minus dividend into R upon K whole upon K. Already we have computed everything. Just be careful that से सबसे पहले ये component solve किया जाता है, उसको फिर 36 में add किया जाता है, and we form the numerator. Divided by K 15%, और उसके बेसिस से हमारा क्या आ जाता है? Price of equity share आता है. This is what we are required to do in terms of price of equity share. Next question. Question number 9. Following figures and the ratios are related to a company. Sales ये रखा है all on credit. Thank you very much for providing a clarification that पूरा का पूरा sales credit sales है. Even if that kind of clarification is not made, we always make an assumption that the entire sales is on the credit. GP ratio. Okay, sales is given, GP ratio is given, so COGS हमको मिल जाएगा. Fixed asset turnover ratio based on COGS. Very good clarification is made that say the fixed asset turnover ratio is found based on COGS. If at all such kind of clarification is not made, then in that case most of the suggested answers of the institute take sales into account instead of COGS. Stock turnover ratio, need not to mention that it is on COGS, it is always assumed like that. Liquidity ratio 1.5:1. Dear students, ये 1:1 देने का कोई मतलब नहीं है. Always all the ratios are 1:1 only. When I say that say the current ratio is 2, it means that say the 2 rupee of current assets for every 1 rupee of the current liability. Current ratio. Receivable, that is debtors collection period. Reserves and surplus to the share capital. Capital gearing ratio. Fixed asset to net worth. You are required to prepare balance sheet of the company on the basis of above details. Then the second part of the question is there. I would like to read the second part of the question slightly later on, First of all, I would like to give you explanation of some sequence that you can understand for the purpose of doing answer. See, you have been provided with the information about the sales. Then information is provided to us about the gross profit ratio. So you can compute the gross profit ratio and COGS. Fixed asset turnover ratio is given based on COGS. So you can compute the fixed asset. Stock turnover ratio is given based on COGS. So अपने को stock मिल जाएगा. We'll be able to get the stock value. Then see, liquidity ratio is given, current ratio is given, we have the stock. So using that information, we will be able to find current assets, we will be able to find current liabilities, we will be able to find the quick assets. Average collection period is given. We already have the sales, average collection period. So we get the value of the debtors. Then we have been provided with the information about the fixed asset to net worth ratio. So dear students, we already have the fixed asset. So we can compute the net worth. Capital gearing ratio. So we can make the computation of the long-term debt. Then you have been provided with the information about the reserves and surplus to the share capital. We already have found the net worth. So share capital can be found and reserves and surplus can be found. Isn't it easy question? This is the sequence in which you can do one by one working to compute the answer. Always friends, in this kind of question it is difficult to decide that what is the sequence in which you can do the answer. However, over here fortunately we could do it. Every time is this not possible. The reason is that many a times you go on doing answer, then you will understand and say, okay, this information is to be used for doing answer. So let us start with the answer of question number 9. So answer of question number 9. In that, working note number 1, calculation of gross profit. It is sales into gross profit ratio. What is the sales value? 90 lakhs. What is GP ratio? 35%. So this is 90 lakhs. GP ratio is 35%. That comes to 31,50,000. Okay. Working note number 2. Calculation of COGS. It is sales minus gross profit. What is the sales value? 90 lakhs. What is GP? GP is 35 lakhs. Sorry, 31,50,000. So 90 lakhs minus 31,50,000, it comes to 58,50,000. That is the way the COGS can be found. Next, calculation of the fixed asset. Now fixed asset will be found using the fixed asset turnover ratio. So fixed asset turnover ratio. It is COGS, not sales because it has been given, divided by fixed asset. So fixed asset is COGS upon fixed asset turnover ratio. COGS value is 58,50,000. divided by fixed asset turnover ratio, which is given to us as 1.50. So divided by 1.5, that comes to 39 lakhs. Okay. Then calculation of stock. Now for the purpose of calculation of the stock, we will use the stock turnover ratio. Stock turnover ratio, it is COGS upon stock. So stock is equal to COGS upon stock turnover ratio. What is COGS value? It is 58,50,000. Divided by stock turnover ratio is provided as 6. So divided by 6. It comes to 9,75,000. That is the way the stock can be calculated. After making computation of the stock, we'll compute the current assets and current liabilities. Let us see how to make the calculation of answer. According to me, this is an important working. See, the current ratio is equal to current assets upon current liabilities. What is current ratio given to us in the question? It has been given as 2.5. So 2.5 is equal to current assets upon current liabilities. So current assets is 2.5 into current liabilities. This is what we understand is the first equation. Next is given as the liquidity ratio. It is current assets minus stock divided by current liabilities. Liquidity ratio is given to us as 1.5. So this is 1.5 is equal to current assets minus stock. What is the stock value? 9,75,000. Divided by current liabilities. Listen carefully now. So it is 1.5 current liabilities is equal to current assets minus 9,75,000. Okay. Now current assets is equal to 9,75,000 plus 1.5 current liabilities. You can see that we already have computed that current assets is 2.5 of the current liabilities. So now we can understand that 2.5 of current liabilities minus 1.5 of current liability is equal to 9,75,000. This I have transferred over here and I have replaced the current assets with this value. These two things I have done simultaneously. 2.5 minus 1.5 is current liability, 9,75,000. So we understand that over here, after making the computation of the stock, we'll have the calculation of current liability. And according to me, this is an important working. Once you have the current liability, calculation of the current assets is not difficult. Calculation of the current assets. It is 2.5 of current liability 2.50 into what is current liability? 9,75,000. It comes to 24,37,500. It is 24,37,500. This is the way we have the current assets. You can verify the answer also. See, 24,37,500 current assets divided by 9,75,000 current liability. You get the answer 2.50. Now, 24,37,500 current assets minus stock. Stock value is 975. So we have the numerator as the quick assets, 14,62,500 divided by 9,75,000. It comes to 1.50. This is the way you can cross verify the answer. Next, we'll make the computation of the debtors. That is very simple. Calculation of debtors. We know that the average collection period is 12 months upon annual credit sales multiplying with the debtors. So as far as the debtors is concerned, it is annual credit sales divided by 12 months into average collection period. Now what is the amount of the credit sales? Amount of the credit sales is given, I think it is 90 lakhs. So 90 lakhs divided by 12 into 1. $7,50,000. Okay, next. After calculating the debtors, we have been provided with the information about the fixed asset to net worth, so we can compute the net worth. Calculation of net worth. Fixed asset to net worth. That is provided as 1.3:1 does not make a sense again. So the fixed asset upon net worth is equal to 1.3. So the net worth is equal to fixed asset divided by 1.3. What is the amount of the fixed asset? It is 39 lakhs. So it is 39 lakhs divided by 1.30. It comes to 30 lakhs. Yet there are two other information, reserves and surplus to the share capital. That is 1:1.5. So now we'll make the computation of the share capital and reserve. Calculation of share capital and reserves and surplus. Share capital, reserves and surplus. What is the ratio given to us? 1:1.5. Now 1:1.5 makes a sense. 1:1.5. Reserves and surplus to share capital. Okay. It is reserves and surplus to share capital. So for every 2 rupee 50 paise, the bifurcation is like this. We have the net worth of 30 lakhs. So for 30 lakhs, we are required to show the bifurcation. 30 lakhs upon 2.5 into 1. It comes to 12 lakhs. 30 lakhs divided by 2.5 into 1.5. It comes to 18 lakhs. So this is the way we can have the bifurcation. Next is capital gearing ratio. Now the capital gearing ratio information which is given to us will be useful for the purpose of making the calculation of the long term debt. Calculation of long term debt. Capital gearing ratio. Dear students, capital gearing ratio has a formula like this: long term debt plus preferential capital divided by net worth minus preferential capital. This is the formula that we have. However, in this question, preferential capital is not provided directly or indirectly, so we assume it to be 0. What is capital gearing ratio given to us? It is 0.7875. It is 0.7875. Long term debt is X upon net worth. Net worth is an amount of 30 lakhs. Since the preferential capital is 0, so we are ignoring it. So the amount of long term debt is equal to 30 lakhs into 0.7875. 30 lakhs into 0.7875. It comes to 23,62,500. 23,62,500. Yes, this is the way we make the computation of the long term debt. That's it. Now, mostly the balance sheet that say we intend to prepare can be prepared from the information that we have extracted so far. So, balance sheet, no name of the company is given, as on is not given. So, balance sheet will have the liability side, amount, we have the assets and also amount. That is the way we will complete the balance sheet. Okay, let us start further. Balance sheet may will show first of all the equity share capital, which we have recently calculated. Amount of equity share capital is 18 lakhs. Afterwards, we will write the reserves and surplus. Reserves and surplus is 12 lakhs. Then long term debt. The amount of long term debt that we have found is 23,62,500. Okay. Then we have the current liability. The amount of current liability that we have found is 9,75,000. No other bifurcation is given, so we will mention it as it is. 9,75,000. उसके बाद हम लोग मेंशन करेंगे फिक्स एसेट. अमाउंट ऑफ द फिक्स एसेट इज आई थिंक 39 lakhs. Yes, the fixed asset is 39 lakhs. Then we'll have the stock. Stock is 9,75,000, which we have computed using the stock turnover ratio. सो स्टॉक इज 9,75,000. उसके बाद हमने डेटर्स का कैलकुलेशन किया है. द अमाउंट ऑफ डेटर्स इज 7,50,000. डेटर्स इज 7,50,000. We already have the total current assets. The total current assets that we have calculated is an amount of 24,37,500. So what we can do, we can make the computation of the other current assets. 24,37,500 minus debtors 7,50,000 minus stock 9,75,000. That will give us the other current assets, or we can say it is cash in bank. Either of the thing that you can mention. This is the way you are required to complete the small balance sheet. 750, 975 plus 39 lakhs. So asset side total is 63,37,500. Liability side 18 lakhs plus 12 lakhs plus 23,62,500 plus 9,75,000. So it is again 63,37,500. This is the way we are required to prepare the balance sheet. So here is the balance sheet that we have. So that is the answer of the first part of the question. Liability side, equity share capital, reserves and surplus. Long-term debt, current liabilities. We do not have any other bifurcation, so we do not bifurcate it. On the asset side, fixed asset, no investments are provided to us. Stock, debtors, cash bank. That is the way the balance sheet is prepared. Friends, over here, the second part of the question says that you are required to calculate the working capital requirement, and the company wants to make a provision for contingencies at the rate of 15% of the net working capital. So we are required to compute simple working capital requirement, and 15% of the working capital requirement is considered to be the provision for contingencies. So B part of the question. In that, we are required to write the answer like this. Statement for working capital. We have the stock 9,75,000. Stock is 9,75,000. Next is the debtors. Debtors is an amount of 7,50,000. Cash and bank 7,12,500. These are the current assets. The only current liability is 9,75,000. So difference of that is the working capital requirement before considering contingencies. So it is 975 plus 750 plus 7,12,500 minus 9,75,000. So it comes to 14,62,500. 14,62,500. Afterwards, margin for contingencies. It is at the rate of 15%. it comes to 2,19,375. And based on that, we'll have the total working capital requirement. It comes to 16,81,875. This is the way the working capital requirement can be calculated. So this is the way we can compute the working capital. Stock 9,75,000, debtors 7,50,000, cash and bank 7,12,500, current liabilities is 9,75,000. So this is the working capital before margin requirement. There is a margin of 15% और उसके बेसिस से क्या हो जाएगा, वर्किंग कैपिटल का कैलकुलेशन हो जाएगा. This is what we understand. Next, the next question is, explain the agency problem and agency cost. How to address the issues of the same. Let us see the answer. The answer is like this. First of all, let us have some discussion that what happens that say in case of a sole proprietor business or in case of the partnership business, like the owners and the managers are one and the same. However, in case of a public limited company, the owners and the managers are different. Owners are shareholders and the managers are like those who have been appointed to manage the business. Many a times what happens that say the managers who have been appointed basically to do the function in such a way so that say ultimately it increases the wealth of the shareholders. However, they do something which is favorable to them and not to the company. This is what's the crux of entire question. So basically over here, what is solution? Solution is that whatever the salary or whatever the perks that say they are supposed to get, it should be linked in such a way so that say they will be going for the maximization of the wealth of the shareholders, and with that say they will be able to get the return. They will be given a certain percentage of the profit. So when the profit increases, they will get more remuneration. They will get more commission. They will not be given a loan beyond a point. Why? Because it is not linked with the profit. It is not linked with the maximization of the wealth of the shareholders. This is what's the simple answer of the question. Now let us read the answer. Though in sole proprietorship firm, partnership firm, etc., owners participate in the management, but in corporates, owners are not active in the management. So there is a separation between the owner or shareholders and manager. In theory, managers should act in the best interest of the shareholders. However, in reality, managers may try to maximize their individual goal like salary, like perk, etc. So there is a principal agent relationship between the managers and owners, means the shareholders and the manager, which is known as agency problem. So basically the managers are not working in the true spirit, that is the issue. In nutshell, agency problem is the chances that the manager may place personal goal ahead of the goal of the owners. Agency problem leads to agency cost. So in order to overcome this, we incur certain expenses, and that cost is given a name as the agency cost. Agency cost is the additional cost borne by the shareholders to monitor the managers and control their behavior so as to maximize the wealth of the shareholders. Generally, agency costs are of four types. One is monitoring, another is bonding, the third is opportunity, and the last is structuring. Addressing the agency problem. Agency problem arises if the manager's interests are not aligned to the interest of the debt lenders and equity investors. The agency problem of the debt lender would be addressed by imposing negative covenants. Covenants means simple language conditions. That is, the managers cannot borrow beyond a point. This is one of the most important concepts of the modern day finance, and application of this would be applied in the credit risk management of the bank. Fundraising, value distress companies. Agency problems between the managers and the shareholders can be addressed if the interests of the managers are aligned to the interests of the shareholders. It is easier said than done. However, the following efforts have been made to address the issues. So these are the steps that we take. First, managerial compensation is linked to the profit of the company to some extent, and also with the long-term objective of the company. Second, employees also designed to address the issue with the underlying assumption that the maximization of the stock price is the objective of the investor. Effecting monitoring can be done. This is what we understand is the answer. Next, compare between finance lease and the operating lease. Finance lease and operating lease, difference of that is very simple. It is exactly the same thing that you study in accounts that you are required to write over here. Suppose there is a company which is dealing in the business of chemicals. It wants to purchase a machinery. For the purpose of purchasing machinery, first of all, it is making a research that where this kind of machinery it can purchase. It has found that there is a supplier which is there in United Kingdom, and it is able to supply the machinery that it wants to buy. It is making a contact with that supplier, is giving the specifications and everything. However, lastly, the chemical company thinks that instead of borrowing funds and purchasing the machinery, or instead of investing our own funds, let us do one thing, that let us go for the lease. So this company is going to the ICICI Bank and asking the ICICI Bank that I want to purchase this machinery. Rather, I want you to purchase this machinery and give this on lease to me. आप ये मशीनरी खरीदिए, आप ये मशीनरी मुझे भाड़े पे दीजिए. तो यहाँ पे क्या करेगा, ICICI Bank will buy that machinery from United Kingdom. Afterwards, that machinery will be given to this chemical company on lease. Now, suppose the useful life of the machinery is 20 years. Then what do you think that what would be the lease agreement time period? If at all your answer is that's the 19 years or more than that, then in that case your answer is correct. In a way that we understand that the lease period will be consisting of the majority of the time period. Okay. Now I am giving in another example. Suppose I have my office, let us say located in heart of the city. Suppose I have let us say that's 1000 square feet of it at Nariman Point. Now I want to give that the office on the rental. I want to give it on the lease. So I am giving an advertisement in the newspaper. Then in that case I get different applications. I get an application from a lawyer, I get an application from a doctor, I get an application from a mobile company. Like that, there are a number of applications which I am receiving, for like me to lease out that office to someone. These are the two examples that I have given for the lease. This example of the lease which I have explained to you or which I have discussed with you is the finance lease. And the another example which I have discussed with you that's at Nariman Point I have my own office, that example is about the operating lease. Like that, so there are two types of lease agreement. Finance lease is basically the customized lease agreement wherein the prospective lessee, that is over here the chemical company, is basically for a long time period acquiring the asset. Over here ICICI Bank would determine the lease rental which is sufficiently covering in the present value term the entire cost of the asset. These lease agreements, finance lease agreements, are not easily cancelable. There is a huge compensation which is required to be paid. Suppose after 2 years this chemical company says that now we do not want to use this asset, you take it back. Now where this ICICI Bank will locate a customer who is interested to take this machinery on the lease? So if at all the chemical company wants to cancel the agreement, then huge compensation is required to be paid. Understand that. The Nariman Point example, operating lease. I'll do the lease agreement, let us say for 11 months. I'll do the lease agreement for the shorter period. I do not want to recover the entire value of the asset from the one lessee only. If at all somebody wants to vacate the premises, then in that case my condition is that say only you have to give 1 month notice to me or 2 months notice to me. Why? Because it is a general asset which can be used by number of persons. That is the operating lease. Let us go one by one with the differences. So this is the concept that you are required to keep in mind while answering the question. Finance lease, in that remember the example of ICICI Bank and chemical company. Operating lease, remember the example of Nariman Point. The risk and reward incident to the ownership are passed on to the lessee. The lessor only remains the legal owner of the asset. Lessee is only provided the use of the asset for a certain time period. A risk incident to the ownership belong wholly to the lessor, to the owner. Lessee bears the risk of the obsolescence. Risk of obsolescence of the asset is borne by the lessee. Lessor bears the risk of the obsolescence. Lessor is interested in his rental and not the asset. He must get his principal back along with the interest. Therefore, the lease is non-cancelable by either of the party. Dear students, it is either that is cancelable, or otherwise the terms and conditions for the cancellation is so much stringent that neither of the party wants to cancel it, because you have to pay huge compensation if at all you want to cancel it early. Even we understand that say over here in this example of the finance lease, suppose the chemical company is doing business excellently. 5 years of the business have already gone and it is at the peak of its business. One competitor of this chemical company is approaching the ICICI Bank and telling ICICI Bank that say you lease out that machinery to us, we will give you higher lease rental. Basically there is an intention to disturb the operation of that chemical company, because these installation and all this process will take the long time period. By that time the operation of the chemical company will be suffered. So again over here the ICICI Bank is required to pay the huge compensation, so generally they will not cancel it. As the lessor does not have the difficulty in leasing the same asset to other willing lessee, that is the lessee, the lease is kept cancelable by the lessor. However friends, it is cancelable by both the parties, that is by either of the party practically. Lessor enters into the transaction only as a financer, ICICI Bank. He does not bear the cost of the repairs, cost of the maintenance, cost of the operation. Usually the lessor bears the cost of the repairs, maintenance and operations. The lease is full payout means the present value of the lease rental will cover mostly the value of the asset. That is, the single lease repays the cost of the asset together with the interest. The lease is usually non-payout You cannot recover everything from the one lessee only. Since the lessor expects to lease the same asset over and over again to the several users. This is what we understand. Dear students, a small summary. The question number 1. Is from the chapter of ratio analysis. According to me, it is a very simple question. Similar to this questions you already have covered earlier. Second is cost of capital. I would say that this is an important question with respect to the calculation of the cost of debt financing and cost of preferential capital financing is concerned, because in this question they have provided that you are required to adopt yield to maturity approach for the purpose of calculation of the cost of capital. Third, it is a capital structure. It is a very simple question wherein we are required to calculate the rate of preference dividend. So you have to apply the financial indifference point formula. So I would say it is a simple question. Fourth, leverage. Again a very simple question. There are two activity levels are provided to us. For each of them we are required to make the computation of the leverage and earning per share and change in earning per share. Capital budgeting. Question number 5. It is of capital budgeting. This is an important question. Not only there are important points, at the same time say the sequence in which you are required to do answer is also important. Rental income forgone is opportunity cost. Apportionment of the expenses is irrelevant. Savings of waste removal expenses is inflow. Idle time payment is irrelevant. All those things are really good in this question. Working capital changes. Question number 6 is again a simple question, debtors management or the receivable management. This is a simple question that you can ignore it in your revision. Question number 7, risk analysis and capital budgeting. In that again we had to make the computation of NPV by applying CE technique, certainty equivalent technique. In my opinion, this question is provided very simple, not having any complication. 8th is dividend policy, in which you had to make the computation of the P0 by using the Gordon model and by using the Walton model. In my opinion, it is again a simple question. Question number 9. In that there are two things that we had to do. One is the preparation of the balance sheet and another is working capital. So working capital plus balance sheet. This is quite good question. Just make sure that you have practice of this kind of question. Similar to this, questions have been asked in examination. Question number 10 is theory question. 10A, 10B. 10A is important question regarding the agency cost. 10B is relatively a simple question, in which we had to give the difference of the operating lease and finance lease, where you can write everything what you study in your accounts. That is also absolutely acceptable that we have. So this is what we have from Navkar with respect to the revisionary test paper of November 20 CA Intermediate Financial Management.
If you like this video, share it with your friends. Subscribe to our YouTube channel to watch more such videos and learn from our expert faculty members. press the bell icon to get regular notifications whenever we upload a new video. Download NDI mobile app to get complete CA course online. We value your support. Thank you for watching.